then everyone is still vulnerable to catching this thing. So a lot of people are saying he's jumping too soon. We know that his instinct is to try to rip up all these regulations. A lot of his own backbenchers want that as well. Lots of opposition also say, well, maybe this is a convenient distraction, of course, for the Prime Minister, a big announcement when we all know the context of what's going on in terms of the investigations into those very same rules that he is alleged to have broken, that he's trying to do away with. And
just to bring us up to date on that particular point, David, for the international audience, where we seem to have weeks of very intense speculation as to whether Prime Minister Johnson would survive. He has in the near term, hasn't he? He's still there doing that job. Where are we in his fight for survival?
Well, yes, he is still there, and he gave an interview with the BBC yesterday where he refused to answer this question, I think 17 times, when he's just stonewalled the interview. He does not want to comment. He doesn't want to give any more airtime to this question of did he break the rules he set, and was he at any of these parties of the demonstration? But there is a police investigation still going on. We know that that is advancing. We know they've sent questionnaires to the people involved. So before too long, maybe within the next few days, we might find out their conclusions. And the full Sue Gray report, you know, the senior civil servant who was tasked initially to look into these events. We're going to get a lot more detail, possibly lurid detail, about exactly what went on. That is a moment of ultimate danger for the Prime Minister. Can he then sort of continue to brazen this out throughout that, even if he is slapped with a criminal fine, with a fixed penalty notice? Is it even feasible for Prime Minister to continue?
Meanwhile, many countries, NATO members, will be looking for, well, will be focused on what's going on over in Ukraine and on the border with Ukraine, focused on the press conference taking place in Moscow at the moment, and there'll be a sense that many of these NATO countries will need to have strong leadership in place to handle the challenges that might or might not come in the days ahead.
Exactly, but you know, international tensions running very high. We've seen this flurry of diplomatic activity over the weekend from President Macron of France, trying to stitch together a potential summit, perhaps, between the US and Russia. Britain wants to be playing a key role, of course, geopolitically. Mr. Johnson said that was what Brexit was about in many ways, but in some ways it seems to be having the opposite effect of Britain not actually being at the top table. And all this distraction at home of the domestic politics is obviously stopping him from actually playing that key role. He has been zooming around. He was making the speech at the Munich conference. He wants Britain to be playing a key role as a key member of NATO and of the UN Security Council, but actually all the attention, it seems to be elsewhere at this moment.
Okay, David, thank you very much for the update. Bloomberg's David Merritt with the latest on the UK politics. Now, keeping you up to date with news from around the world, let's get a First Word News update. Here's Angel Feliciano. Angel.
Anna, Russian President Vladimir Putin says he's considering an appeal for official recognition from separatists in East Ukraine, and a decision come later today. It's a move that would likely torpedo European-mediated peace talks and further escalate tensions with the West. Putin's Security Council just wrapped up a meeting that discussed this issue just hours after the military said it had killed 5, quote, saboteurs and destroyed 2 Ukrainian armored personnel carriers that crossed into Russian territory. India's COVID-19 outbreak is easing, but that's not necessarily good news for the nation's clinical laboratories and testing manufacturers. Top operators Metropolis Healthcare and Dr. Lal Path Labs have each plummeted at least 30% this year. The decline picked up speed after their December quarter earnings trailed analysts' expectations. Now, Deutsche Bank is warning its employees not to delete WhatsApp messages from their phones. It's part of efforts by the German lender to clamp down on private communication channels amid a U.S. crackdown. In December, U.S. authorities imposed $200 million in fines on J.P. Morgan Chase for staff use of WhatsApp and other private email accounts. And Alphabet's Google has reached a settlement for an undisclosed amount with a woman who said she faced discrimination by the search giant after she became pregnant. Chelsea Glasson sued Google in 2020 after she claimed her repeated efforts to report pregnancy discrimination were ignored. Google hasn't commented on the settlement. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
In our view, yes, we'll see, perhaps a prolonged period of 100 plus at some point in the next 6 to 9 months. It's very difficult to be precise about the exact timing, but demand is going to surge the second half of the year, provided there's no additional worries about the pandemic and provided travel resumes to something like normal.
That was the Vitol CEO, Russell Hardy, speaking exclusively to Bloomberg about his outlook for oil. Natasha Kaneva, JP Morgan Chase, Global Head of Commodities Research and Strategy, joins us now. Natasha, great to have you with us. I wonder if we can talk about the geopolitical premium that there is in oil markets or commodities more broadly. Let's focus on the oil market, shall we, first off. What kind of premium do you think is in there geopolitically? And if we see President Putin recognizing the independence of certain eastern parts of Ukraine, in the eyes of Russia seeing them as independent, upping the ante geopolitically, what kind of risk premium would we expect to see then? We sit at 95.03 on Brent right now.
Yes, no, you're absolutely correct. So oil provides the largest risk premium asymmetry. If you look at all the commodities that are being exposed to the potential Russian sanctions or some constraints from the Russian supply and Russian exports, definitely the biggest asymmetry we see in the oil prices. So tight as the market right now in the oil is that we do believe that if there is an Iranian deal, because yes, there is another argument that is currently taking place in the oil market. It's the deal with Iran that seems to be reaching some level of agreement. But the market is so tight that if there is an agreement with Iran and if the tensions subside between Russia and the US, we see the market actually reaching somewhere, 84, 86 to maybe $90 per barrel with those two conditions in the place. But at the same time, and where you're absolutely correct, where the symmetry in the price is coming through, is that if there is an escalation in the tensions in Russia, even with the Iranian deal, we do see that the prices can easily go to about $120 per barrel. In the worst case scenario, the prices can go as high as $150 per barrel. That's what our forecast is pointing to.
Okay, and do you think that even if So do you think that would be if we saw an invasion of Ukraine? So if we see Russia invade Ukraine, then we go to $120 or $150 a barrel, Natasha? Is it possible to make those kind of simple links? And if we do see that taking place, does it make a deal with Iran more likely?
So, I mean, clearly the uncertainty in the market remains high. As this week we have a couple meetings. The main one will be the meeting between the Russian Foreign Minister Lavrov and the U.S. Secretary of State Blinken. So from that perspective, there's clearly a lot of uncertainty where it's going. But at the same time, what we keep pointing is that the market is very tight. Even anticipation that there could be some disruption from the supplies coming from Russia. Russia is number one, number two, and number three producer, yes, depending what the U.S. or Saudi Arabia doing, is that would have a very, very material implication. It does not necessarily need to happen. It's the market anticipating that something like that could potentially happen. Yes, from that perspective, we would be looking at something closer to $120, very quick escalation from the current levels. The worst case scenario, $115.
Okay, that would be the sort of quick response. What are the prospects for a deal with Iran, Natasha? I mean, does this geopolitical tension and the role that Russia plays, does it mean that those who are participating in those conversations with Iran are going to sort of double down and be more minded to find a solution to bring back those Iranian barrels?
Well, clearly, considering where the oil market is currently, as where the prices are currently. So what we're seeing from our side is that the prospects of reaching a renewed nuclear agreement clearly are improving. That's what we see from the headlines. The agreement is by no means complete, and there's a clear two-sided risk to the oil markets. But in general, if indeed there is an agreement and the agreement comes and is announced quickly and the sanctions are removed, we do believe that, the prices, when we look at the prices, fundamentally, it would be 84 to 86. Average for the year, we're looking something closer to $90, even with the Iranian agreement in place. But we need the Russian tensions definitely to be removed from the market.
Let me ask you about gas prices. Sitting here in Europe, Natasha, the gas price story are really central. Every time we see escalation in tensions and some of the diminished hopes of a diplomatic solution, we see energy prices go higher. And here in Europe, we see gas prices go higher. That is the case once again today. We're off the highs that we saw in the fall, in the autumn of last year, but still a very strong move. Natasha, what can you tell us about gas prices and where you expect them to head?
Yes, Anna, you're correct. Yes, so the December of last year, we had gas prices trading at about 180 euros per megawatt hour. Right now, we significantly lowered with about 75. So what happened in Europe this winter is that Europe had a very warm winter. Asia had a very warm winter. The wind generation across Europe, we're looking at about, it increased by about 50%. So because of that, definitely the balances are softening. And that's why you see that the prices are not at 180, they're at 75 today. So overall, we're seeing that there is a significant amount of slack in the market and buffer in the European inventories, that the price will actually remain at around current levels. We do not believe that the price will spike higher. However, if there is intensification, yes, of those escalation, yes, in the Russian-U.S. tensions, then the risk premium will actually start appearing closer towards the fall of winter of 2022-23, because that's when the question mark about Nord Stream 2 will come. Yes, right now the market is pricing in that the pipeline will be approved somewhere September, October, and the flows will resume towards the winter. But clearly this will be a big question mark if indeed that's the case. So that's when the risk premium will appear again in the market.
Okay, and that's when the sanctions conversation will be to the fore. Natasha, thank you very much. Natasha Kineva, JP Morgan Chase, Global Head of Commodities, Research and Strategy. Thank you so much for your timely contribution. And talking of timely contributions, we'll get next to a conversation with Alina Rybakova, Deputy Chief Economist at the Institute of International Finance, as we watch Russian stocks drop more than 10% in response to the latest political rhetoric, the latest political headlines. We'll talk about where the Russian economy stands and where it could head if we did see an invasion. This is Bloomberg.
going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
From New York City,
in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets. It's 10 minutes to 4 here in London, 10 minutes to 2, or 9 minutes, in fact, to 11 in the morning if you are in New York. Let's focus back on the geopolitics. And Russian stocks are having their worst day since the height of the pandemic sell-off 2 years ago as tensions continue to rise. What does the future hold for the Russian economy then if there were to be an invasion of Ukraine? Let's talk now to Elena Rybakova, the Institute of International Finance Deputy Chief Economist. We should continue to point out that Russia denies it has any intention to invade Ukraine. We've heard from President Putin today he plans to decide on the status of separatist movements in eastern Ukraine today. All that said about the geopolitical backdrop, Elena, if we did see any further tension, if we did see an invasion by Russia, what would that do to your reassessment? What would the pressure points be for the Russian economy?
Well, I think it's very important to watch what the U.S. authorities and European authorities were saying about the planned sanctions. And I think should this invasion go ahead, we know that there is a package already prepared. It's a multilateral package. It's a package across the different countries. And I think there are 2 key elements of that package. One is the financial sector, access of the Russian banks to the U.S. dollar. I think that's key. And the second one is more focused on export controls. So if some of the systemic banks, and we know that SOE banks cover most of the Russian financial system, if some of these banks are touched, that will definitely have an impact on financial stability and growth. For now, we have a growth forecast of about 2% for this coming year, potential growth 1.5%. But of course, with sanctions of severe magnitude, will very possibly even go towards 0 or maybe even negative growth in the near term.
How damaging would it be if we did see banks facing difficulties in accessing the US dollar system, Elena? When I've talked to Russian executives in recent years, they've been keen to emphasize the way the Russian economy has been trying year after year to reduce its reliance on the US dollar.
Well, Fortress Russia, one of the aspects of it is disintegration from global financial markets. And the US dollar is now only 16% of reserves of Russia. You know, it's surpassed by gold. Even yuan holdings are at par. Also, physical holdings of Russian reserves are away from the US constituencies, US jurisdiction, sorry. So definitely there's been diversification. Because of the 2014 sanctions, Russian corporates and banks were forced to repay debt. So they're not borrowing as much on the external capital markets. But that said, you know, we still have about 25% of deposits in foreign currencies. Some of it is dollar. And it's very important for global trade and specifically trade on energy and commodities that Russia is, for example, exporting to Europe. So they will have issue of settling that trade as well.
Tell us about the fallout you'd expect to see in commodities markets, Elena, if we did see further tensions here, because it isn't, we focus a lot on oil, but it isn't just exports of oil or indeed gas, also other metals and agricultural products if we're talking about Ukraine as well.
Absolutely. So just talking about other metals, for example, Russia exports more than 40% of all the European consumption of palladium, and that's very important for green transition. We have also other key metals where Russia is a producer, like titanium. So we need to watch out for that. And indeed, agricultural products, especially Ukraine. Ukraine is an important supplier to Europe, but it's also an important supplier to countries in the Middle East. For example, Egypt or Lebanon. They're reliant on exports from Ukraine. And we're talking about agricultural products, but some of it is also food for the livestock, and that will also affect a broad range of food products. And with already high inflation, with commodities and agricultural products, high share of emerging markets inflation, that will definitely have an impact on the global emerging markets.
You mentioned the area of sanctions was in two, or the focus on sanctions is in two dimensions, financial services and export controls. Where would you see export controls having the most impact, Elena?
The export controls have impact on Russian medium-term growth outlook. So we're going towards sort of almost economic and financial autarky. And without the productivity spillovers from the West, Russia will struggle to develop its IT sectors, already struggling to develop new fields in oil sector. And I think that will continue to weigh on productivity and growth outlook for Russia. It could also force Russia to engage more with China. As we know, China is trying to onshore a lot of their production. And the question is how compliant China will be in terms of enforcing some of these export controls that are coming from the US.
Elena, thank you very much. We appreciate your time. Thanks for bringing us up to speed with the Russian economy. Elena Rybakova, the Institute of International Finance Deputy Chief Economist. Really good to get her perspective on the vulnerabilities of the Russian economy and the vulnerabilities of the global economy to Russian exports and Russian production. Coming up here in the next hour, Chris Williamson, Chief Business Economist at IHS Markit. We'll delve into the UK PMI story. We had data out a little bit earlier on today, waiting for confirmation of how the UK is going to change its rules with regards to COVID. So we'll talk about that. We'll also keep in mind the sell-off we're seeing in global risk assets as a result of tensions around Russia and Ukraine, down by more than 1% on the Stoxx 600 right now. The FTSE 100 a little more resilient, but some of these markets down by 1.8% or so. Are we seeing diminished hopes of a diplomatic solution here? More on that next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets. Here are the top stories that we're following for you around the world. Tensions on the rise over Ukraine as Vladimir Putin says he will make a decision today on official recognition of separatists in eastern Ukraine. We'll bring you the latest on that developing situation. And as tensions rise over Ukraine, Russian markets take a hit, at one point seeing their worst day since 2008. We'll bring you the latest as that situation unfolds. And we'll bring you the latest on European banks as Deutsche Bank warns employees not to delete WhatsApp amid regulatory scrutiny, while Credit Suisse navigates reports it managed accounts for clients tied to corruption. All that and more coming up this hour. Let's first check the markets for you, though. This is the situation across some key markets for you as we continue to focus on the geopolitics. The Stoxx Europe 600 in negative territory started the day positively on hopes that we'd see Presidents Biden and Putin meeting. Then those hopes quickly dashed as the Kremlin said there were no concrete plans for such a meeting. And then some of the lines coming through from the Russian Security Council meeting, where we heard from Putin and from Lavrov and many other voices, did seem to lean in the direction of diminishing hopes of a diplomatic solution. As a result, we saw Russian stocks reacting quite considerably. You see the MOEX, that index of Russian stocks, down by 10.5%. As I mentioned in the headlines, at one point, the worst performance for Russian stocks since 2008. We have the CAC 40 in there because we also have substantial losses for some European markets. The CAC 40 down by 1.8%. The Xetra DAX down by 1.7% as technology and autos and auto parts and luxury names and some of those sectors that have been so resilient in recent weeks, or at least relatively so, suffer. Also worth focusing on what's going on in FX markets, because when I was looking earlier at Russian assets, I noticed the Russian ruble down by 2.3%, so that's an area of focus for us. The euro hanging on to some of its gains, up by 0.1%, despite the risk aversion, and interesting to think about the role that the euro and the dollar are playing in this situation. A lot of people focus on the way that the European economy might be exposed to Russian tensions. Brent crude, of course, is exposed to Russian tensions, but perhaps in an upward direction, up by 1.8% as we see these tensions simmering on the Ukrainian border. We're focused on where Brent crude goes in that context, but also taking into consideration latest developments around Iran. Now, let's step away from the geopolitics for just a moment and think about the UK growth story. UK PMIs released today as the UK prepares to lift COVID restrictions. What will that do for the economy? Joining us now is Chris Williamson, Chief Business Economist and an Executive Director at IHS Markit. Chris, let's start with what we've learned today, and then we'll get to thoughts about what lifting COVID restrictions could do. So the data out today, the latest PMI surveys, what does this survey of purchasing managers, what does it tell us about the way that the economy could surge back from Omicron?
Yeah, well, it's very strong reading in February so far. So this is the preliminary reading. We have the final ones at the beginning of March, but these are very promising looking numbers. One of the strongest growth rates in the service sector that we've ever seen with this survey. This goes back 25 odd years. So looks like the opening up of the economy from the lockdowns or restrictions for the Omicron variant have really benefited sectors such as tourism, travel, hospitality, leading to this big upsurge in service sector activity. At the same time as well, some of these restrictions being eased have removed some of the supply constraints that have been impeding manufacturing. So we saw manufacturing output growth also pick up. So a nice broad-based uplift there.
Okay, and where are we on the labour availability questions, Chris? Because there's a big focus on, globally, a big focus on the willingness of people to come back to the workplace, and some people deciding that they don't want to go back to the workplace post-COVID. And this is not just a UK phenomenon, this is elsewhere, but the UK labour market tight for other reasons, perhaps due to Brexit in certain sectors as well. So where are we on labour availability?
So yeah, still a big problem, but less so than it was in January, for example. January seems to have been the worst for the Omicron variant in the UK. Well, December and January, that turn of the year, when lots of absenteeism, as well as the background of the just general shortages, they were exacerbated by more people falling ill and being absent from work. And that really added to a major constraint on the economy in December, January in the UK, eased somewhat. And also what's interesting here is that the supply constraints, the supply chain delays, they're easing as well, quite significantly again in February, building on an easing that we saw in January.
Do we get any sense of why that's happening, Chris? Because it's really interesting. We talk to businesses, and this is not just UK businesses, global businesses. You do get a sense that supply chain concerns and difficulties are lingering for them longer than they'd anticipated. I'm thinking perhaps here of auto manufacturers and kicking things into the second half of the year in some cases. So where are we seeing things getting better for UK businesses?
Well, there's lots of supply delays. It's just they're not getting as bad as they were in the peak period throughout much of 2021. So we're seeing pockets of supply improve, and you can see this if you look at, say, the data coming out of Asia Pacific at the moment. Their production in the Omicron wave has so far not been anything like as badly affected as it was in the first wave and the Delta wave. You've got sustained production growth coming out of a large part of APAC. China's the outlier there, where obviously that was hit. But we've got global supply chains are starting to repair, albeit from a low base. It is an improving situation. But that's not to say it's turning around immediately and there's no delays. It is a constraint. It varies around the world. But Europe is looking like it's seeing one of the biggest turnarounds in that supply situation. So as we go through 2022, it's going to become much less of a drag. Likewise, those labour shortages, they're very evident in the Eurozone in today's numbers, as well as the UK. But the UK, where we had Omicron earlier, those labour supply issues are moderating. So that's a positive sign for globally as well, how Omicron is less of an impact than it was for Delta.
And Chris, what do we see in the detail around inflation? What kind of gauge do you get of input costs?
Well, here's where there's mixed news. On one hand, those easing supply constraints are taking some of their pricing power away from suppliers, leading to alleviation of manufacturers' input cost inflation. So good news there. It's still very high, still one of the highest we've seen for a decade in terms of producer prices going up, but it's coming down. But at the same time, you're getting increased pressure from energy and wage bills. So if you like, the baton's being passed in terms of the upsurge in inflation from materials through to labour and energy. You just saw your own data there showing the Brent crude oil price. This is going to feed through further into March as well. The overall upshot of that is that measured across all firms, input cost inflation accelerated in the UK again in February. So this is going to feed through to more persistent high CPI readings in coming months.
And what's your perspective on what businesses are braced for or should brace themselves for, Chris, when it comes to higher interest rates in the UK? We've seen the Bank of England, of course, hike rates already, and there is an expectation that more will be coming. Are businesses ready? Are businesses going to be able to be resilient in the face of that?
Yeah, I mean, these have been well flagged, right? We all know that policy normalisation is coming this year. It's coming from historically super accommodative stances. So I don't think at the moment the projected path that most people are expecting and what the Bank of England signal is going to cause firms too much pressure. But there's so many other headwinds that certainly those interest rate hikes adding on to the existing headwinds, such as the energy price rise that's going to hit households, that income squeeze. And you've got Brexit. I think there's some fascinating data inside the detail of the survey. If you look at, for example, how order books are trending differently in manufacturing and services, you've got demand continuing to rise at an increasing rate in services, but it's failing to accelerate in manufacturing despite this opening up. If you look at UK manufacturing export orders, they're slumping. the gap between UK export performance and Eurozone export performance is one of the widest that we've seen in 15 years. Brexit is the biggest headwind for manufacturing, and it's greatly outweighing anything the Bank of England does in terms of a headwind for manufacturing.
Chris, thank you very much. Thanks for joining us. Chris Williamson, a Chief Business Economist at IHS Markit. Thank you for your time. Coming up on this program, Deutsche Bank is stepping up scrutiny of employee communications amid a US crackdown. More on that story next. This is Bloomberg.
Is moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Markets, a special edition for the President's Day holiday, of course. Now, keeping you up to date with news from around the world, here with your First Word News update is Angel Feliciano. Angel.
And Russian President Vladimir Putin said he'll decide later today whether to officially recognize separatists in eastern Ukraine, a move that would likely torpedo European-mediated peace talks and further escalate tensions with the West. A meeting of Putin's Security Council held on the issue came against a backdrop of heightened concerns over Russia's troop buildup near Ukraine, even as Moscow continues to deny plans to invade. Russia's military said it had killed 5, quote, saboteurs and destroyed 2 Ukrainian armored personnel carriers it said crossed into its territory. Kiev denied the claim. More trouble for Credit Suisse. A new report says the bank managed accounts for clients involved in human rights abuses, corruption, and drug trafficking. That's according to leaked data on more than 18,000 accounts that together held more than $100 billion. The New York Times says the data covers accounts opened as far as back as 1940s. Credit Suisse rejected the allegations and said they were largely historical. And Alphabet's Google has reached a settlement for an undisclosed amount with a woman who said she faced discrimination by the search giant after she became pregnant. Chelsea Glasson sued Google in 2020 after she claimed her repeated efforts to report pregnancy discrimination were ignored. Google hasn't commented on the settlement. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg. Anna.
Angel, thank you very much. On to the banking sector. Deutsche Bank is warning its employees not to delete WhatsApp messages from their phones in an effort to clamp down on private communication channels. Bloomberg's Michael Moore joins us now with more. Michael, what do we know about the efforts here at Deutsche Bank?
So this is part of a continuing effort from Deutsche Bank. You know, we reported earlier this month that they were stepping up some technological efforts to try to monitor communications on different platforms. They're looking into use of kind of these off-platform communication systems, and this has become an area of focus for regulators, especially in the pandemic as you have more people working from home. You know, they want to make sure that banks are able to keep track of the communications between their employees, to be able to monitor that, make sure compliance has a handle on what's going on trading desks and in other areas.
This must be an ongoing headache, not just for this bank, but for others. And we've seen other banks fall foul of regulations on this front in the past.
Yeah, regulators sent a huge message in the U.S. with the fine on J.P. Morgan, you know, in the hundreds of millions. So that caught all the bank's attention, and you've seen, you know, Deutsche Bank be vocal with its employees here of reminding them of their policies, trying to make sure that they don't run afoul.
Okay, and the other big story we're following, of course, in the financial services world today, around Credit Suisse. I mean, here's a bank that's had a lot of issues to contend with, to put it mildly, in the last year or so, and now facing this talk of clients tied to corruption. This, according to a report issued by one newspaper, or a series, sorry, of newspapers in sort of collaborative activity. Does this shed any new light on client activity at Credit Suisse? Some of this is quite old information, according to the bank.
Yeah, it is largely historical. I think, you know, it does raise these questions, not just about Credit Suisse, but about, you know, Swiss banking secrecy over the years, and who they were taking on as clients, and was there enough due diligence done on some of these clients. You know, it's a huge database of information that leaked from a whistleblower. So, you know, there's a lot of reports out there. Credit Suisse has, you know, said most of these are old issues, but I think the question remains, how much has changed since some of the tax evasion probes and a lot of the clampdown on the compliance in Swiss banking, versus how much of this still kind of goes on.
Right, and so that's the specific claims here, but the broader issues for Credit Suisse. I mean, this is a business that's seemed to face issue after issue, most recently struggling to hold on to its senior management team because of other reasons, but there's just been probe after probe, and Archegos and Greensill and all of these other issues. How, I mean, are we any closer to finding, to turning a corner, I suppose, in the narrative around Credit Suisse?
I think it's still to be seen. I think, you know, it's somewhat proven by a lack of things blowing up over a period of time. You know, they haven't had that for a couple of years now, where they've had a quiet period. So I think the big question remains, you know, does compliance there have enough power? Do they have a handle on some of the risks involved in both the investment bank and in wealth management? And I think only time will tell on that.
Okay, thank you very much, Michael. Thanks for your thoughts on the banking sector this afternoon. Plenty of stories to follow there. Thanks to Michael Moore. Let us just get to some breaking news lines coming through from the Fed. The Fed's Michelle Bowman, an American attorney and a governor on the Federal Reserve's board, most importantly for us, of course, saying that she supports raising interest rates in March. She's commenting in the text of a speech at a bankers' conference. My intent is to take forceful action to cool inflation. Urgency to tackle inflation increased since the January FOMC. Bowman says, watch the data closely to judge the size of the March hike. So I suppose that would be the new information if we knew what kind of size of hike would be voted for. It seems that the market is already assuming there will be a hike. The size of it is the crucial question, and at the margin, expectations of a 50 basis point hike seem to have reduced of late. We'll be back shortly. More on the markets. This is a Bloomberg.
capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets. Now, escalating Russia-Ukraine tensions have pushed oil prices close to $100 a barrel. I spoke exclusively with the Vitol CEO, Russell Hardy, to discuss the possibility of oil pushing higher.
We actually touched 100 on dated Brent on Monday, I think it was. So it's not a new phenomenon. And you know, when you look at the supply and demand factors that have been affecting the market for the last couple of years since the pandemic, demand's recovered now to about the level we were pre-pandemic, and is going to exceed the level we were pre-pandemic in the back half of 22 and into 23. So supply needs to catch up, and I think what the market's worried about is how much supply there is going to be available in the second half of the year and going into 23. So in our view, yes, we'll see, you know, perhaps a prolonged period of 100 plus at some point in the next 6 to 9 months. You know, it's very difficult to be precise about the exact timing, but demand is going to surge the second half of the year, you know, provided there's no additional worries about the pandemic and provided travel resumes to something like normal.
Are you expecting the supply situation to remain pretty constrained? Because we have incredible backwardation in the markets right now. Is that going to be something that persists?
It should persist, yes. OPEC, as you'll know, is ratcheting up at 300 to 400 per month, according to their OPEC Plus agreement. So more supply is coming, but eventually we're going to run out of spare capacity, and that's what the market's trying to work out, how worried to be about that scenario. And you know, one of the short-term solvers is US shale. And US shale clearly is increasing in production, but it's not increasing as fast as it did in 2014, 2015, 2016. There's a lot more capital discipline. There's a lot less general capital available to throw at the shale industry. So it doesn't look like it's got the capacity to grow as fast as it did in 14, 15.
Do we know what kind of prices destroy demand? You know, we've seen prices higher than this, haven't we?
Yes.
Not all that long ago.
Yeah, I think you're right. 11, 12, 13, around about that time, we were 100, 110 range. So we have seen these prices before, but I think when that occurred in 11, 12, 13, we didn't have the coincidental sort of gas price and coal price explosion that we have today as well. So I think consumers are getting it from all angles, which is certainly not a good thing. And demand will at the margin be lost because the price elasticity is there. Clearly, as it gets expensive at the pump, people are going to do a little bit less driving.
We've mentioned a lot about how supply is tight. One thing that could change that, though, at least to some degree, is Iran, and whether conversations with Iran result in Iranian fuels coming back to markets, essentially. What is your expectation there? There does seem to be some expectation that's going to happen. It's going to happen this year.
Yeah, I think all the parties have been talking this week, in fact, and it sounds like there's an agreement beginning to form. There's clearly, you know, it's been a long path to get here. So I think the market's assuming something will get done in the next few weeks, and probably the market needs that oil, right? And the second half of the year would benefit from that additional supply. Just from a consumer's point of view, that the market will be a little bit more easier to balance. And I think most people have got that factored in for the second half of the year. Most people would expect an additional volume from Iran. Clearly, they're producing oil and they're consuming oil themselves today. So the extra supply that they could send out to the world would probably be about 1 million barrels.
Do you have any sense of how much sort of geopolitical premium there is in the oil price? From what we've discussed, supply and demand dynamics would suggest that oil prices stay elevated even without that geopolitical risk premium. What would you assume would come out if we see these tensions ebb away?
I don't think the geopolitics specifically account for a huge, talking about the Russia-Ukraine conflict, I don't think that accounts for a huge amount of the price premium at the moment.
That was the Vitol CEO, Russell Hardy, speaking to me at the end of last week about energy markets. Let's have a quick check on the markets then and where we are right now, because the tensions today have been evident. The geopolitical tensions have been evident in markets. We have European equity markets moving to the downside in session, down by 1.2%. The FTSE 100 underperforming, down by outperforming the others, down by 0.3%, so still moving to the downside. The CAC 40 just shy of 2% to the downside. We've seen Russian stocks very much in the crosshairs. The Russian equity market down by 10.5%, at one point the most since 2008, as a result of tensions between Ukraine and Russia. It seems that President Vladimir Putin is going to decide today whether to recognize Russian separatists in eastern Ukraine. That could change the calculus for many Western countries. We'll get to analysis of that in the next part of our program. We'll also dive into FX markets and volatility we can expect there. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets. It's a special edition of the programme, of course, because US equity markets are closed for President's Day. But one thing that is entirely normal is the fact that European equity markets are about to close up for the session. So coming to the end of the trading day here in Europe, in around 8 seconds' time, European equity markets opening very much to the downside. The Stoxx 600 down by 1.4% as we approach the close here. And there we are, European equity markets now closed. And the FTSE 100 actually getting the best of the losses, if that's relative to other major markets, down by 0.4%. The CAC 40 down by 2.2%, and the DAX down by 2%. Interesting to see that mid-session, some of these markets had recovered a little bit, but now down more than 2% once again on the CAC and also on the DAX. If we look at the sectors that are in negative territory, that gives us some clues as to why that might be. Autos and auto parts down by 2.7%. That's a big weight, obviously, over on the Xetra DAX. And we have technology stocks down by 2.6%. So that's clearly a big factor across Germany and across France as well. So that's where we're seeing some of the worst losses coming through. You see the FTSE MIB down by 1.8%. As I said, the broader story is to the downside for European stocks. I think we've got a board of some FX markets as well for you. A little bit of dollar weakness coming through, despite the risk aversion that we're seeing. It's interesting to think about what risk aversion means for FX markets, how it is expressed in FX markets right now, because we do see some gains for the yen. The Swiss franc in focus for us as a result of geopolitics as well. Here we've got some interesting intraday moves in some stocks that we have in focus. I'll catch up with my graphics in just a moment. I'll stick with the corporate stories. AstraZeneca reporting positive data on a breast cancer drug, and that is something that's meant that particular share price has moved to the upside, up by just shy of 4%. Credit Suisse is in focus for us. There we go. We've caught up with each other now. Credit Suisse down by just over 3%. Various reports from a number of non-profit journalism groups, and starting with a newspaper article in the Süddeutsche Zeitung talking about how clients had been tied to corruption. Credit Suisse saying a lot of these allegations are historic, and many of these accounts have now been closed. Says most of these accounts have now been closed, but that does weigh on the share price of Credit Suisse right now. And Galp Energies over in Portugal, Portugal's biggest oil company, down by 2.8%, so not making the best of the gains in oil prices today, which are up by 1.4%. It says it's looking for opportunities, of course, in renewable energies. It continues to scan for opportunities, is the wording that we heard from the CEO of Galp Energies a little bit earlier on today on Bloomberg TV. So that's the close of European equity markets. A number of notable movers, but the big political picture is dominant. The geopolitics is dominant. Joining us now is Derek Halpenny, Head of Research, Global Markets, EMEA, and International Securities at MUFG. Derek, really nice to have you with us. I mentioned we come to FX, and we'll do that in a moment, but I'll linger on the sort of broader risk aversion that we're seeing across assets, and we've seen it certainly in European equity markets today. President Putin saying he must decide on whether to recognize separatists in the Donbass. This will be a big departure from the Minsk peace process set up in 2014-15, and that could take us in a very unpredictable direction here in this crisis. What do you take away from today's headlines?
Yeah, well, you know, when we came in first thing this morning, it was all good news, and there was going to be a potential summit between Putin and Biden, and just like days that have gone past, we're ebbing and flowing between the markets believing we're going down the diplomatic route and that we'll get progress on that, and then flipping to some form of Russian invasion, whether it's isolated to the eastern part of Ukraine or more broadly speaking. And clearly we've deteriorated. And I think what you've just mentioned is really significant, because that formal recognition would be another big step away from the Minsk agreement, and I think would certainly raise expectations in the market that the next step is that there is some potential incursion into the eastern side of Ukraine.
So that could trigger something pretty risk-off. Do you think?
Well, I think the markets, as I said, have been ebbing and flowing between the two. Again, it's so difficult to predict, Anna, because of course I think a big aspect for investors is not just necessarily what Russia do, but it's how do the US and Europe, NATO respond? And in particular, what are the sanctions, and how severe would those sanctions be if there was a partial incursion into eastern Ukraine? And I think until we know more about the actual aggression of the sanctions taken, it's difficult for the markets to kind of weigh up exactly how things would pan out. But clearly that's the direction we would be going in. You know, from a Russian perspective, the equity market got really significantly hit today. That's a real sign that investors in Russia are pricing in more aggressive sanctions are on their way. And then that broadly then starts to have implications for further markets beyond that.
It's interesting. I was reading some comments. I think it was from Jens Nordvik at Ex-Ante talking earlier about how Russian assets do seem to react earlier than global assets, although there has been plenty of read across into global assets today. Let's think about FX then, because I'm interested in why we are not seeing a stronger dollar. On a day where risk aversion is to the fore, the dollar doesn't seem to be gaining. The yen gains some of that. The Swiss franc gains some of this. So talk to us about when one haven is better than another haven in the world of FX.
Well, I think we're at an interesting moment because, of course, beyond the ebb and flow of specifically what's happening in Russia, there's also an ebb and flow in the broader markets between the geopolitical risk in relation to that, but also what was going on before that. And that's the fundamental story of inflation becoming a problem, central banks being behind the curve and pricing in more aggressive tightening. And I think, you know, that aspect saw equities already down, 6-7% before the geopolitical risk was priced. We've also now seen the markets at the front end in the US price in nearly 7 rate hikes at consecutive meetings. And when we look at what's happened in FX, in terms of positioning and in how we analyze it, one way in which we analyze the leveraged fund positionings of long dollar positions, it shows the most extreme long position close to going back to 2011.
Even without the geopolitics, that was very much driven by, was it driven by the expectations of hiking?
Exactly, exactly. It was more certainly the bigger fundamental story of hiking. So I think the markets are very much positioned for, the scenario of nearly 7 rate hikes. Then, of course, the way the euro reacted to the pivot from the ECB on the 3rd of February and what's happening in other G10 central banks, the markets aren't completely positioned for what potentially might be coming there. And therefore, that's giving positive momentum for these currencies versus the US dollar. So I think in circumstances when the dollar is so stretched in terms of positioning, has already rallied significantly, although it's come back from that to a degree. Looking at the Swiss franc, looking at the Japanese yen in particular, I think, because the Japanese yen in a lot of metrics is very undervalued, there is certainly more scope for those traditional safe haven currencies doing well.
Okay, Derek, thank you very much for your thoughts. Derek Halpenny, Head of Research, Global Markets and EMEA International Securities at MUFG. Thanks to Derek for joining us. Let us just go to the UK Houses of Parliament. Prime Minister Boris Johnson is now speaking to the House of Commons. We've been waiting for him to announce some new rules around COVID restrictions. Let's listen in.
Nation to protect half our population with at least 1 dose. And having made that decision to refocus our NHS this winter on the campaign to get boosted now, we were the first major European nation to boost half our population too. And it's because of the extraordinary success of this vaccination program that we've been able to lift our restrictions earlier than other comparable countries, opening up last summer while others remained closed, and keeping things open this winter while others shut down again, making us one of the most open economies and societies in Europe, with the fastest growth anywhere in the G7 last year. And while the pandemic is not over, we have now passed the peak of the Omicron wave, with cases falling, hospitalizations in England now fewer than 10,000 and still falling, and the link between infection and severe disease substantially weakened. Over 71% of all adults are now boosted in England, including 93% of those aged 70 and over. And together with the treatments and scientific understanding of the virus that we've built up, we now have sufficient levels of immunity to complete the transition from protecting people with government interventions to relying on vaccines and treatments as our first line of defense. As we have throughout the past 2 years, we will continue to work closely with the devolved administrations as they decide how to take forward their own plans. And today's strategy shows how we will structure our approach in England around 4 principles. First, we will remove all remaining domestic restrictions in law. From this Thursday, 24th of February, we will end the legal requirement to self-isolate following a positive test. And so we will also end self-isolation support payments, although COVID provisions for statutory sick pay can still be claimed for a further month. We will end routine contact tracing and no longer ask fully vaccinated close contacts and those under 18 to test daily for 7 days. And we will remove the legal requirement for close contacts who are not fully vaccinated to self-isolate. Until the 1st of April, we will still advise people who test positive to stay at home, but after that, we will encourage people with COVID-19 symptoms to exercise personal responsibility. Just as we encourage people who may have flu to be considerate to others. Mr. Speaker, it's only because levels of immunity are so high and deaths are now, if anything, below where you would normally expect for this time of year, that we can lift these restrictions. And it's only because we know Omicron is less severe that testing for Omicron on the colossal scale we've been doing is much less important and much less valuable in preventing serious illness. We should be proud that the UK has established the biggest testing programme per person of any large country in the world. This came at vast cost. The test, trace and isolation budget in 2020-2021 exceeded the entire budget of the Home Office. It cost a further £15.7 billion in this financial year and £2 billion in January alone at the height of the Omicron wave. We must now scale this back. From today, we're removing the guidance for staff and students in most education and childcare settings to undertake twice-weekly asymptomatic testing. And from the 1st of April, when winter is over and the virus will spread less easily, we will end free symptomatic...
Prime Minister Boris Johnson there speaking in Westminster, speaking in the Houses of Parliament, in the House of Commons, saying that the UK, or England, sorry, specifically, will remove COVID isolation rules on February 24th, that is later this week, Thursday of this week, and they will be ending, England will end routine contact tracing in England. COVID testing and tracing programme, it came at a vast cost, and that scale was much less valuable with Omicron. So those are the headlines coming through. As expected, the UK setting out plans for England to end any of the existing COVID restrictions. Now, coming up on this programme, we'll get back to the geopolitics for you. More on Russian tensions with Livia Paggi, head of political risk at GPW. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Welcome back. Live from London, I'm Anna Edwards. Welcome to Bloomberg Markets, a special edition for the US public holiday, of course. Now, Russian President Vladimir Putin says he'll decide later today whether to officially recognize separatists in eastern Ukraine, a move that would likely torpedo European-mediated peace talks and further escalate tensions with the West. Joining us now is Livia Paggi, partner at GPW, who has been advising investors on the recent geopolitical events. Livia, very nice to speak to you. So let's start with this news today that President Putin says he will decide today as to whether to recognize separatists in eastern Ukraine. What is the significance of that for you? What should investors watch for?
There's no doubt that Putin is upping the ante, potentially as a negotiation tactic ahead of the diplomatic talks this week. Lavrov and Blinken are supposed to be meeting. There's also talks of Putin and Biden potentially meeting Thursday, although that's yet to be confirmed. This is certainly, if Putin does go ahead and decide to recognize these two republics, it's a clear departure from the Minsk agreements and basically an attempt to undermine current forms of diplomacy that exist. And we've seen that over the weekend, he's taken also a number of other measures, really ramping up the pressure.
A lot of what we've heard from Western leaders has all been about sanctions that could be introduced if there were to be any kind of invasion, and treating an invasion as a very binary subject, I suppose. How does eastern Ukraine play into this? How should we think of Luhansk and Donetsk if we do see Russia recognize them as breakaway states? How does that play into the West's assessment of what's happening?
The West has mostly said that they will issue sanctions if there's an actual invasion, which probably means if we see Russian troops on Ukrainian territory going in. And which is why probably Putin, in our view, is using this more as a negotiation tactic, because it really follows in this gray area where it might not be technically sanctionable acts.
Okay, and President Putin saying today, we're not discussing annexing separatist-controlled areas, so possibly useful to put that in as well. What is the path forward for diplomacy? What is the path forward for diplomacy, Livia? You've talked about the meeting that is planned between the foreign ministers, essentially, of the United States and Russia. Does it need the leaders of these two countries to come together to get close to a solution here?
Absolutely. Putin is really looking to get concessions from the U.S. much more than NATO. He views the U.S. as the leader of NATO, and it will be key to see what comes out of the meeting between Lavrov and Blinken. Really, ultimately, Putin is looking to get, in some ways, he's already won to some extent, because so far NATO has not put in troops in Ukraine, which is a clear indication that NATO is not willing to go into Ukraine and defend Ukraine on its behalf, which already demonstrates to Putin that Ukraine will not fall fully under NATO hands. And also, secondly, Putin is probably looking to get more transparency over the arms funding in Ukraine, looking for concessions around what kind of nuclear missiles can be used in Europe, and really just to ensure that Russia has full control over its borders and that NATO no longer continues to militarize his border states.
Do you think some form of words, Livia, can be found by the US and the West that will reassure Russia sufficiently but won't give Russia a veto over NATO enlargement?
I mean, as I said, I definitely think some form of transparency over what kinds of arms will be provided to the Ukraine going forward. This was a real red line for Putin over the past year, the fact that NATO was militarizing around its border states and that Ukraine was getting arms from NATO. So probably some language around that will be key. And again, this issue around nuclear, what kind of nuclear testing can be done, that's also been a major issue for Putin over the past few years, which he's been looking to get concessions on.
Okay, useful. Thank you very much for that briefing. Livia Paggi joining us, their partner at GPW, on the latest geopolitics. Coming up on this program, fears of a tech crackdown in China rattle that sector. More on that next. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Okay, traders, hello again. I got a cancel order. If you remember, we placed an order these few hours ago to sell short euro against United States dollar. It moved substantially down, then it moved up, and right now there's not much point to sell short at this level. We'll have to wait, and we will have to sell probably if we decide to sell short at the different level. Please cancel the order to sell short and wait for our extra instructions, or you can get the strategy and trade on your own. It's all explained in the strategy how to trade. You can use other pairs, not only how many pairs we have, 1, 2, 3, 4, 5. We have 4 pairs, Forex pairs and Bitcoin. You can trade indices, you can trade tradable stocks, shares, you can trade pairs, Forex. So you don't have to stare in our screen and wait until I will tell you what we place order for. Because we have several screens, and you can see only one screen, what's happened on one screen, but we trade probably every half an hour. We place trade, we sell, we buy. So we're quite busy right now. Okay, guys, I'll speak to you later. I'll let you know when something on the screen will appear on your screen, and let you know if you want to still copy trades and place them and trade this way. Stay safe, guys.
Because there was a huge pushback from China at the time, and they pulled the plug on it. It's got its fingers in a lot of pies. It's invested in a lot of other companies. China was saying that their state-owned firms in particular need to evaluate their relationships with Ant Group. We don't quite know what that means, but it clearly doesn't, again, suggest that it's terribly bullish, that China is massively confident in the future of these companies.
Yeah, it's interesting. I talked to an investor earlier on who was saying it's just really unclear at this point what room there is for private investment, private money in the common prosperity drive that she has underway. And until we get more clarity on that, it's difficult to reach firm conclusions, was his view.
Yeah, and it's really reflected in some of the valuations of these companies. If you look at a company like Tencent, it seems like there are discounts being priced in because of this regulatory risk. And so it trades at something like 27 times forward earnings. That's a bit of a discount to the likes of Apple and Microsoft, and in particular Amazon.
Okay, we started this conversation talking about concerns around the metaverse, and there's a sort of gaming link there. Let me take you to another story, which is FTX, the crypto exchange FTX, launching its own gaming unit. What do we make of this development?
Well, it is interesting that FTX obviously is an exchange for cryptocurrencies, but a lot of people think that when it comes to the blockchain NFTs in general, that gaming is really where it does have an application. You can be sniffy about what NFTs really are and what they do, but in a world where you might be paying, let's say you buy a Burberry skin for a game that you're playing.
Let's say you do.
Let's say you do. You've got enough money to spend on that. Proving that is a real Burberry skin and that it's not one that it's a rip-off, then that might require an NFT, or an NFT might be a way of demonstrating that. So therefore, FTX is trying to gin up this sort of business and encourage more gaming companies to adopt this technology.
Okay, so the use in gaming of NFTs, something that we certainly watch. Alex, thank you so much. Thank you very much. Bloomberg's Alex Webb joining us there with the latest on the tech space. That is it for this special edition of Bloomberg Markets. European equity markets then closing out the session down by 1.3%. Some of these big markets in Europe down by more than 2%. Geopolitical tensions certainly to the fore. We wait to hear from President Putin today. Says he's going to decide on whether to recognize separatists in eastern Ukraine. I'm Anna Edwards, live in London. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Thank you so much for having us. So do you have a direct line to the president now?
Well, he's enthusiastic. Obviously the project is significant and a lot of interest around it. But it's also, he says, hey, I really want your views. I want your views on the semiconductor industry, on the shortage, how to be, more effective partner with business, some of the geopolitical topics. So we have a date planned to get together again.
When you talk to him, do you feel like he learned something? Like, what did he take away from the conversation?
Yeah, I gave him a 20-minute briefing. And some have said, how there is he? But he was engaged. He was asking questions, seeking to understand, excited about the benefits to the region. And I'll tell you, Emily, this idea of the Silicon Heartland, it just pulled on something deeper in the nation. And, the plans have sort of been under work, and all of a sudden, hey, let's get this announced, and what a kick in the pants for the CHIPS Act.
That's Intel CEO Pat Gelsinger leaning in with President Biden at the White House, unveiling a plan to invest tens of billions of dollars in the American heartland of Ohio, create thousands of jobs, and bring chip manufacturing back to U.S. soil. It's part of an ambitious effort to revitalize a lagging company and wrest control of an industry from Asia. The question remains, will it work? Joining me on this edition of Bloomberg Studio 1.0, Intel CEO Pat Gelsinger.
Pat, so good to be here with you.
It's always a joy, Emily, to be with you. Thank you for having me.
And here at the Intel Museum, which is obviously a sign of the legacy, which you were part of, because you worked here for 30 years before you left.
Yeah, 30 years, an 11-year vacation, and then now back for just about a year.
So tell me about that call when you got asked to come back as CEO. We're coming up on the 1-year anniversary.
It was right before Thanksgiving, a year plus ago, and the request was, would you consider joining the board? So I asked Michael, right? Hey, Michael, what do you think? Right? He says, hey, they need help, go help them. And that Michael. And the VMware board was okay. Yeah, if Michael's supporting it, we're okay with that. So I interviewed to join the board for the month of December. They said, would you consider being the CEO? So it just ruined my Christmas season last year. Our 8th grandchild was on the way, and the VMware gig, and I wanted to get the public offering of VMware done and everything. So it was sort of like, wow, or wow. And how was that going to play? So 3 weeks of chaos, and then obviously the January 15th announcement, and the idea of coming home, being a successful CEO, coming back now to the company that I was born and raised in, as I like to say. I went through puberty here. I started so young. And now the opportunity to lead and really help the resurgence and reestablishment of this iconic company. It really is the honor of a lifetime.
What was it like to return to a company that has so much history, which you were part of, but also knowing you needed to shake things up?
The first staff meeting, February 15th, they usually started at 9. I started the first one at 7 a.m. And the first bullet of the first slide, we will have a torrid pace. Right, just setting the
torrid.
Yeah, it's a new word in the Intel vocabulary. The industry is moving rapidly, massive shortages. The competitors are performing well. Hey, what we've been doing ain't working, team. We have to set a new course for the future, and that's gotten underway very rapidly. And we've gotten a lot done over the first year, but you don't change, you don't fix, you don't reestablish after a decade of bad decisions and poor execution. It's going to take a while, but we're well on our way after year 1.
You took the job in the middle of a pandemic, in the middle of a supply crisis, 2 themes that are still with us today. If you could give yourself an honest 1-year report card, what would it say? Give yourself a grade.
Well, let me give you 2 grades. The board gives me an A. I give myself an A minus, right? Now, in some regards, we're ahead of where I thought we'd be. In some areas, we're not as far as I thought we'd be. And it really is more a statement of the massive challenge in front of us. And we still got analysts out here. Some of them piss me off, right? You know, I call them my bears and my perma bears at that sort of say, yeah, it's the right strategy, Pat, but I'm not sure if I need to invest for a year or two, yet. When's it going to start materializing in the marketplace as well? So good progress. It's a good year behind us, and people are really getting excited about the new old Intel.
Do you ever have it out with the perma bears?
Of course, we'll debate on different aspects. And hey, I appreciate divergent views. Yeah. That's part of the Intel culture, right? Andy would argue everything. As I would say, if you were 95% right with Andy, you were wrong.
Well, you know something about hard work because you grew up on a farm. Yeah. Robizonia, Pennsylvania.
Yeah, I say between Reading and Hershey, halfway is Robizonia, and we were 5 miles outside of town. So when you got nowhere, we were 5 more miles.
But tell me about your upbringing. How do you go from farmer in the middle of Pennsylvania to engineer in Silicon Valley?
My dad, number 9 of 10 kids, and Grandpa said, we have enough farms in the family. Just work with your siblings. I'm the oldest boy. Had we had a farm, I'd be the farmer, because that's what the oldest boy does. 16 years old, accidentally took a scholarship exam and won. So I ended up, having the opportunity to go get a technician's degree, community college. And so at 16 years old, skipped my last year and a half of high school, finished my associate's degree, and Intel came interviewing for technicians. So here I am, 18 years old. Intel on the West Coast invites me to come for an interview. I'd never been on an airplane, never been to the West Coast. How long do you think it took for me to say, yes, I'll fly to California, right? It was like 2 nanoseconds, and they offered me a job. And the interviewer said, in the interview, he said, smart, aggressive, arrogant. He'll fit right in.
You actually became the chief architect of the 486 processor? Intel's 486 processor, right?
Yes.
And you had to pitch that to Steve Jobs. I want to hear about that meeting.
Jobs and Andy, they had argued early, and Jobs went off on a different path, right? And because of that, they were using other microprocessors. And so I tried to convince Steve, come back to Intel, right? So, and I tried to sell him on the 386. He sort of threw us out. I tried to sell him on the 486, and he threw us out at the time. And eventually we won him over with the Centrino product some number of years later. But, it was also his insatiable, detailed demand for engineering and industrial engineering excellence. And to me, that's just what set him apart. Literally, I was nudged out of the company at the time. And I was
nudged out or pushed out?
Happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and
You became Intel's first CTO. When did you know you wanted to be a CEO, that you wanted something more?
So in my 20s, I had my first patent. I had my first book being written, programming the 83, 86. It was a bestseller, Emily, right? Had, gotten to be a VP of the company, right? At the youngest VP ever. And it was sort of like, okay, what do I want to do next? Right? And then through that was sort of this soul searching time. And I wrote my mission statement that said, become CEO of Intel. And, here I am, 25, 26-year-olds. Well, being CEO, you got to be kidding me, right? What are you talking about?
Gotta have ambition.
But it became this driving force in me that I'd be in meetings with Andy Grove, Bob Noyce. I was armchair CEOing for a decade and a half as I'm sitting in the room, with these industry legends. And all the time it was making me better.
A lot of people thought you would be a shoo-in for the CEO job when that job came open. So why did you leave if this was your dream job?
Yeah, there was a period of time under Odolini's leadership where he had a different view of leadership, different view of what he wanted his successor to look like. And, literally I was nudged out of the company at the time. And I was heartbroken.
Nudged out or pushed out?
Let's say, somewhere between those two. That 11-year period, by the way, Steve Jobs was outside of Apple for 11 years, right? And there's something about...
Interesting.
Yeah, being away, and I call it the death of a vision, period, where you really have to sort of look and say, okay, why am I pursuing this? Why wasn't I ready for that job? Out of these circumstances, what am I going to learn? I've also seen the VMware and the Dell and the EMC culture up close. I just feel so much more equipped now. And had I stayed on the linear path to CEO, I wouldn't have been the leader that I am today.
So those 8 years as CEO of VMware.
Hugely valuable.
You wouldn't change a thing.
I wouldn't change a thing, right? And I learned the value of software. And hey, Intel's going to do a whole lot more software in the future, I promise you. But it was also a period of personal development as well. Developing humility, confidence, insights on how to be a leader at this scale.
Moore's Law has guided the development of the chip industry for decades. It's not a law per se, but it's been critical to the development of semiconductors.
We might even go super Moore's Law this decade. And, 4 reasons I said was the case. We know how to build transistors that we can see them scale for the next decade. We have power delivery. How do you get the power in and out of the chip with our PowerVia technology? Third, we have the lithography. We also see that packaging, we'll call 2.5 and 3D, which is becoming much more like wafer building as we look to the future. So here we are, 100 billion transistor chip will be our largest chip that we do today, our Ponte Vecchio for high performance computing. By the end of the decade, we will deliver the trillion transistor chip. And I just say, with utter confidence, I sit here and say, my team's going to make that happen. So industry, buckle up, hang on. We are going for a ride.
So what happens after a decade? I mean, do you think Moore's Law can continue forever?
To me, Moore's Law has always been about a decade, right? Where we can see in front of us the core technologies, the barriers, we're lining up the things that will allow us to do it. So 5 years from now, we'll have the next interview, Emily, and you'll say, are you still good for a decade? And I hope to be able to answer that question, yes.
So we have a date in 5 years.
There we go, absolutely.
Okay. Your strategy involves doing multiple things that Intel has never been able to pull off before at the same time, moving into Foundry, for example. Why do all of these things at once?
These are reinforcing strategies. It's not like this one is in conflict or separate from the others, but they are making each other better. And let's talk about the Foundry as an example of that. If I open my Foundry doors up, that means I have customers benchmarking my process technology every day, right? I'm not an internal guy anymore. Instead of just saying, here's my chip, or you can go to external foundries, I'm going to say, let's go together. And we'll bring some of your stuff. We'll optimize some of our stuff. Also some of the new business areas that we're launching. Hey, we've been in internal graphics forever. Now we're going to do discrete graphics. We're going to build on things that we're already doing and doing well.
Now, investors seem to be really excited about the ambition, the speed, the aggression, the torrid pace, if you will, but they're not excited about how much it's going to cost. And they want to know about margins. And I know you've said 5 years. That's when, those historically high margins will return.
That's right. It's going to be at a couple of years of investment. And I am proud of making those investments. We're not being managed on a quarterly Wall Street view, right? We are investing for a long-term return, and I'm pretty darn proud of that.
And you've budgeted up to $28 billion here, but your rival, Samsung TSMC, they're planning to spend way more than that. So is there a chance this could cost even more than you're planning?
Well, what we've said, $28 billion for this year, and it could go up next year and the year after. This is big business. This is big capital investments. This is big manufacturing expansion. We're pretty proud of the position. And boy, having doubled my capital investments year on year, hey, we're not being bashful about the big steps forward that we're taking. And with the announcements that we've laid out, we believe that we'll be back in fundamental process leadership by 2025.
So I think I saw you wearing a Christmas sweater, taking some shots at Lisa Su and AMD. I believe you said they're already in the rearview mirror. They're never going to be in the windshield again. I asked her about this, and she said, we're playing our own game and we feel good about it. She didn't even say the word Intel. What's your reaction to that?
Well, Lisa's done a good job with AMD as a company. And hey, I think we're back to a leadership position on the client. And server, hey, we got a little bit more work to do in that area.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully. And, the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. And it's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need. Intel, Samsung, TSMC. And we are destined to grow faster than the market to accomplish that objective over that time.
CEO of Apple recently said on the earnings call that it's because of the Apple design chips that more customers are buying Macs. How does it feel if Intel's being designed out?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Do you feel you're getting as much support as your Asian rivals are getting from their governments?
I think in the past, clearly they've gotten more, right, unquestionably. And I think what we've seen over the last number of months is really that the entire political infrastructure in the U.S. realizes how critical this is. This isn't just any industry, right? This is the heart of what the automotive industry needs, of what the industrial industry needs, of what the medical industry needs, the consumer industry, the cloud industry. Every one of those relies on semiconductors. Yeah. The national security relies on semiconductors. This is a priority for the nation.
Well, speaking of national security, tension between the U.S. and China is escalating daily. The U.S. is your home market. China is your biggest market. Isn't that a risk to Intel's future?
The U.S.-China relationship now very critical. big market for us. So, we're in China. We're navigating that carefully. U.S. Global market, big, important for us. And I'll say, how do you navigate that? Carefully, right? It requires you to be deft, thoughtful, engage with the political leaders, the business leaders on both sides. Definitely consumes a lot of our energy, and we have to navigate it well.
Intel asked suppliers to avoid Xinjiang, an area that the U.S. has accused China of human rights abuses. Huge backlash from China. Intel apologized for the trouble that it caused. Why not stand up to China in that moment if you believe human rights are at risk?
We don't, source out of Xinjiang. There's no reason for us to be calling one out over any other. We shouldn't be calling out individual things. It's not our job, right, in that respect. We're here to build great chips, and we have a consistent global policy with regard to human rights expectations of our suppliers. And that's what we've reinforced. And, we feel confident that that's the right way to balance the views that we would have across the globe in this regard.
Your customers are starting to make their own silicon. Microsoft, Apple, Amazon, Alphabet. How do you turn back that trend?
These companies are at such scale now, they can say, well, we can hire another 100 engineers. Let's go start a silicon project. And that's part of my foundry strategy as well. That's right. Google, Amazon, Microsoft, do it with us, right? Come and use our foundry. And when you do that, when you show up to use our foundry, right, we're going to allow our IP to be used by your designers, or let's design together, right? And let's bring together your innovations with our innovations and our leading edge process technology and manufacturing capacity. So we are creating better products that meet your unique needs.
Tim Cook, CEO of Apple, recently said on the earnings call that it's because of the Apple designed chips that more customers are buying Macs, that Mac sales went up 25% for a year earlier. How does it feel if Intel's being designed out?
Very sad, because, they designed a better chip for their purposes than we were giving to them. So what's my mantra to my team? Design a better chip, right? We have to create products and technologies that Apple says, that's better than I could have done myself.
So you think you can get that business back?
Oh, yeah. If we do what I said, build better chips. Obviously, winning the microprocessor back, they've made those decisions about every decade. So I'm not expecting this. We have a number of years to get our act together at that point.
Back in 2019, you said Bitcoin was bad design, extreme, and climate intolerant. Do you still feel that way?
Indeed, I do. A single ledger entry in Bitcoin consumes enough energy to power your house for almost a day. That's a climate crisis, right, at that point, and the more you use it. So if we produce a technology that consumes that much energy, wow, that's not okay. And then you sort of say most of the uses, when I said that, were illicit. Now, that doesn't mean it's not a good technology, but we're not using it good yet. Well, Intel's about to bring forward a blockchain chip, that's dramatically better.
What about the metaverse?
How are you going to use the metaverse, right?
I don't know yet. Tell me.
And I do think that there's going to be, a set of, I'll say, business-to-business applications in the metaverse, as well as consumer applications. Well, in the consumer applications, the nearest embodiment of that would be advanced gaming. So many of our graphics initiatives and PC initiatives absolutely are going to place us in the metaverse. We're also going to help to build the back-end cloud infrastructure for metaverse.
We're moving into our lightning round. We are going to move at a torrid pace.
Yes.
So these are some rapid-fire questions. Okay. I hear you were a late-night radio DJ. Is that true?
Indeed.
What were you spinning back in the day?
Oh, this was easy listening music.
Can you give us your intro?
This is Pat Gelsinger, WFMZ, Allentown. Good morning to everybody in the Lehigh Valley.
I love it. What's the latest TV show you binged?
We're running out of things to watch for my wife and I, Linda, so it was Alias was our last binge.
Okay, best piece of advice that you would give someone in their 20s?
Relationships more important than results.
Best piece of advice for someone in their 40s?
Mentors.
How much does faith guide your decisions?
Every day, every way. I'm working for something much bigger and more important than just being the CEO of Intel.
Speaking of that, you have how many kids these days?
4 kids,
And
8
how many
grandkids.
8
8 grandkids. Woohoo!
And
What
how
a
often
great-
are you getting tapped to babysit?
We're with the kids or have the kids most weekends, right? Between 3 different families. My wife, she is like Grammy of the year, if not the century.
How do you do that and be a CEO? 8 grandkids?
Hey, Saturdays, Sundays, we find ways to fit it in. And as I would always say, life doesn't make room for your priorities. You make room for your priorities.
I hear you climb Mount Kilimanjaro to raise money for one of your charities. Do you still give away half of your money?
Going up every year.
Favorite family meal to cook for the kids and the grandkids?
Oh, I'm the grill master. Anything on the grill, and a great steak on the grill, salmon on the grill. We just had ribs on the grill.
I've been waiting for this one. Do you still have the VMware tattoo?
No.
Was that a real tattoo?
No, it was one of those month-long tattoos. My wife said, if it ain't gone before our vacation, I'm ripping it off of your arm.
I love it. Since you said the farthest ahead that you can see is 10 years, take me to 10 years.
We're going to go on a growth journey as a company that is going to establish us as one of the largest companies on the planet. We will become a very substantial provider of foundry services. I said the #2 company in the industry for foundry, overall major business. We're going to be the unquestioned leader in delivering compute to the planet, including things like AI, graphics, accelerated high-performance computing. We'll be, the company that's creating entire categories like autonomous vehicles. Tesla, Intel, unquestioned.
So it's going to be a torrid 10 years. Are you going to be here in 10 years? Or are you going to be with those 8 grandkids?
When we took the job, we said, this is a 5-year assignment. And it's not that we're done in 5 years, but we knew it wasn't less than 5 years. So we'll see where we are at the 5-year mark and decide how much longer and how much more energy I have. But right now, we're quite enjoying the journey.
All right. Intel CEO Pat Gelsinger, thank you so much for joining us. Fascinating. So much enthusiasm. It's been great to be here.
Thank you, Emily.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
So much for doing this.
Well, thanks for doing it. I'm so sorry I'm late. I know I'm coming late. But
not at all. It gave us more chance to tweak the lights for the 50,000th time. So.
You're doing well?
Yes. How often are you coming into the office these days?
About 2 to 3 days a week, yeah. How about you? I guess you come in.
Yeah, I'm in every day now, so no more kids on the set. I have to ask, is your son still mining Ethereum?
He and I literally were talking about it last night. He's like, Dad, you are the one who made me give up on it. I'm like, no, I didn't. But yeah, the thing that's good about this is I think it excites a whole new generation about technology, which is good.
I really appreciate you taking the time.
Well, thank you for doing it, and thank you for coming down to do it.
I'm ready to go when you guys are.
From Google headquarters in Mountain View, California, this is Bloomberg Studio 1.0 with Alphabet CEO Sundar Pichai. Born and raised in India, Pichai had almost no access to a computer until college, but just years later found himself rising through the ranks of the world's largest search engine. In 2015, it was Pichai that Google co-founders Larry Page and Sergey Brin chose to run Google and later Alphabet. Now valued at more than $2 trillion, it's one of the most powerful companies on the planet.
Sundar, it's great to be with you today.
Thanks for doing this.
Great to be here in person. Google just hit a $2 trillion market cap. Alphabet, I should say. Where is the next $1 trillion going to come from?
I've always felt, your market cap valuation is an effect of the value you provide. And I feel fortunate our mission is timeless. There is more need to organize information than ever before. I still feel search is our biggest moonshot as a company. People will want radically more conversational experiences. They will want what we call multimodal experiences. They may speak to search. They may look at something and ask what the information is. Being able to adapt to all that and evolve search will continue to be the biggest opportunity. We are so excited about, be it YouTube, cloud, our hardware products, Google Play. So we're building a diverse set of businesses, and underlying all of it is the investments we are making in AI. We've invested $100 billion in R&D in the past 5 years. And so applying AI in a deep way is probably where we will create the biggest opportunity ahead.
Microsoft is making some big acquisitions. Apple's anti-ad tracking technology is shaking up the industry. What do you make of these competitive moves? Your competitors say they're on the right side of history. Are they?
I look at the fact that there are 3 billion people who have access to knowledge at their fingertips. I look at the opportunity we provide. I look at the skills people are learning through YouTube. I feel it everywhere when I go talk to people. And providing access to information and knowledge, I think will end up being on the right side of history as well.
Your predecessor, Eric Schmidt, told me that he feels the latest Facebook revelations are disturbing. Google also has access to massive amounts of our data. Why should half the world's population, more than half the world's population, trust Google to do the right thing?
We are trying to do more with less data. One of the biggest changes we made was making auto-delete the default setting for new users signing in, and now over 2 billion users have their data continuously being deleted. Look, we rely on trust for people. Every day when people come to Google, they place their trust in us in vulnerable moments. It may be a health issue on which they are trying to understand. There's no more important responsibility we have than doing right by that trust. When we provide Gmail to journalists and realize that their accounts may be under attack by an authoritarian government, I mean, that's what motivates us to make sure, be it privacy, be it security, be it trust, we are doing the right thing. Over time, regulation will have an important role to play here. I think privacy regulation is important. In areas like AI, regulation will be important. And so I think, those will be part of the answers as well.
The Facebook fallout, that Instagram can be toxic to teens, for example. Has this raised more or new concerns for you about the impact of technology, tech addiction, algorithms, YouTube even, on our children and their development and their mental health? I mean, you're a parent and you also have a lot of power over how this plays out.
Like you, bringing kids up in this modern digital world is something I think all parents are anxious about, rightfully so. I think, it's part of why a few years ago when in YouTube, we were exposed to a set of concerns, we invested. It became our number one priority to work hard at it. The reason YouTube invested so much in developing YouTube Kids as a safe destination for young children and so on. Look, technology is going to play a big role in helping give children the next wave of opportunity as well. So the answer is to develop it responsibly. We have changed our balance in these areas and saying we think about content responsibility first, and then the pace of development or new features in areas like YouTube. And so that's how we have approached it for a while.
Facebook and Microsoft are all in on the metaverse. What do you think about the metaverse? What's Google's metaverse strategy?
It's always been obvious to me that computing over time will adapt to people and people adapting to computers. You won't always interact with computing in a black rectangle in front of you. So just like you speak to people, you see and interact, computers will become more immersive. They'll be there when you need it to be. So we've always been excited about the future of immersive computing, ambient computing, AR. And we are
Does that count as the metaverse? Is that what that is?
Metaverse is, I think it means different things to different people. The way I think about it is evolving computing in an immersive way with augmented reality. As part of that, there'll be many experiences, some of which will be immersive, interactive virtual worlds, which is the metaverse concept. And but I think this doesn't belong to any company, right? I mean, this is the evolution of internet and the web, the internet. All of it will continue to evolve.
Google was famous for its campuses where you could go and never leave. You had everything you ever wanted. Now you've said they can be flexible. They can work from home. They can work at the office. They can be hybrid. They can work remotely permanently, perhaps. Are you committed to really letting them do this forever? And if so, how does that change the future of work and society?
Look, we've really embraced the fact that the future is going to be flexible. At Google, we've always tried to give, agency to our employees. But we do realize the importance of bringing people together, the creativity, community, and collaboration that comes with it. So the balance we are striking is this notion of 3-2. But we are giving the strength of our company is we have more locations than most of the companies. So we're giving people choice to move anywhere in the world. 4 weeks they can work from anywhere. We're going to accommodate 20% of our workforce to be remote over time. So we're going to embrace that flexibility. And
forever?
Forever, yeah. And we're committed to it. Through it all, it forces us to design better products. And since people use Google Workspace to run their companies, I think it gives us a chance to innovate and bring all that out. I think there is so much value in giving people more flexibility between their personal and professional lives. And I think it will lead to people being happier. And I think companies can be successful in that model. And so we are trying to get the best of both worlds, but embrace the flexibility and see where we go.
How confident are you that when you look back, you'll be able to say Google did enough to help save the world?
We are putting so much energy and resource into it.
difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
You grew up in India, you lived through droughts, water was scarce. How has that experience shaped your feelings about the urgency of stopping climate change?
You know, I grew up in Chennai, India, and a big part of my childhood was, really pretty severe water scarcity. You know, we would get water trucked in for the streets and stand in lines and carry a few buckets of water home. There was no running water for many years. And, but fast forward a few years ago, Chennai had 1 in a 100-year flood, which was a very extreme event, kind of drove home. That combined with a few years ago, waking up to the orange skies here in the Bay Area, seeing the look of concern on my children's faces and having to explain it, all kind of drove home in a deeply personal way for me. So I think it's the most defining issue we all face and definitely something very motivated on working towards.
I remember waking up to those orange skies too and having to have that same conversation with my kids. Do you think the commitments at COP26 went far enough?
I'm encouraged by many things. We have to tip our hat to the people who are working super hard. The issues and the trade-offs are genuinely difficult. You have to keep the economies growing. It really matters. But at the same time, it's a pretty severe, urgent issue. So I'm encouraged by the progress. I think it builds on the Paris Agreement. So I can see the forward progress. There is the deep anxiety that it all may not be enough. But we have to be optimistic and keep pushing.
Google has set some aggressive targets to run entirely on clean energy, to be the first tech giant to do so 24 hours a day. How confident are you that when you look back on this time, let's say a decade from now, you'll be able to say Google did enough to help save the world?
We are putting so much energy and resource into it. It's always been kind of a founding value for us. We've been carbon neutral since 2007. We've been matching our energy consumption with renewable energy over the past few years. So this, we are now pushing, it's a moonshot to be 24/7 carbon free. That means every search you do, every email you send, that we can do it carbon free. We were at 61% in 2019. The number is now 67%. We have set our goals to be 100% by 2030. And to do it globally, that means we have to solve new things which we haven't done before. Wind and solar alone won't be enough. We just started geothermal in Nevada. We will be investing in newer technologies, including carbon capture, et cetera, over time. So that's what excites me. We are a technology company at heart. So there are many answers to this problem. Some of it is that we are going to have to innovate our way out of it. And, we want to push as hard as possible in doing that.
Our Bloomberg New Economy Forum is happening this year in Singapore, and the Asia-Pacific region is one of the fastest growing internet economies on the planet. Where do you see the most room, the most opportunity for Google to grow there?
It's such a fitting time frame. I'm glad you're focused on the region. It's the most vibrant region we see. It's our 20th year since we opened our office in Tokyo. It was the first office outside the Bay Area. You have 2.5 billion people on the internet. There are many areas in which they are leapfrogging trends which are here and embracing the future. Digital payments is a great example. So many of our products originated from APAC, Google Maps, Google Pay. A lot of our journey to bring computing to more people is playing out in Asia as well. I am excited about also the work we are doing through cloud, because the companies there are rapidly transforming themselves digitally. So a chance to provide that is something very exciting for us. So super dynamic region. I feel like we are learning as Google, being in the region. And so I think it'll transform. The first 10 years, I would have said we took products here and brought it to APAC. Over the past few years, we are beginning to build things there. And some of our future global products will be APAC first, and rest of the world later.
You can't talk about APAC without talking about China, and you're facing stiff competition from Chinese tech giants there and beyond. What should U.S. policymakers know about competing with China?
There's a lot of conversations about U.S. and China. The competition is fierce. When you look at areas like AI and quantum computing, where we are investing a lot, the Chinese companies are neck to neck. What I think about, I was encouraged by the news coming out of Glasgow about the U.S.-China agreement on climate. To me, while we talk about all the areas where we are competing, some of the biggest areas which are common challenges for all of humanity. The pandemic was one. AI and AI safety over time will be a shared one. Obviously, sustainability is another area like that. So I think these are all areas in which the countries can come together. And so I think that's a way by which we think about as, when we compete on the internet, and there may be different visions of how the internet plays out. So I see opportunities both sides.
What are the chances that Google search will ever come back to China, or that Google Cloud would ever come to China?
Today we don't provide most of our signed-in services in China, and I don't see that changing. But there are ways, as I said, in areas like AI or sustainability, I think there'll be opportunities for us to work together. Through cloud, we will support multinational companies which have presence everywhere, and so many opportunities to work that way as well.
AI is advancing at an astonishing rate, and it is hard to understand sometimes what this really means. In concrete terms, how will our lives look different, let's say 10 years from now, as a result of AI?
Done correctly, in many ways, it's going to be helpful to you. You'll take it for granted. The same way today, for example, in India, over 1/3 of the queries on many phones come through voice. That is something people take for granted. You can do it. So over time, you'll expect to speak and be able to understand any language in the world. And those are all ways it's going to make it better. You may go to a doctor's office and go through a scan, and the system may be prioritizing for the radiologist so that they don't miss some important things, maybe giving them a second opinion. So these are all ways in which it will seamlessly start playing a role, and I think we'll see the effects of that.
You mentioned if done correctly, and there are concerns. There are fears that AI will replicate the worst of society, even under Google's own roof, from your own researchers. What scares you most about AI? What keeps you up at night?
It's the most profound thing we are working on as humanity, and anytime you're developing technology, there is a dual side to it. I think the journey of humanity is harnessing the benefits while minimizing the downsides. The good thing with AI is it's both going to take time. I think I've seen more focus on the downsides early on than most other technology we've developed. So in some ways, I'm encouraged by how much concern there is. And you're right, even within Google, people think about it deeply. We publish a lot of research. I think it's more important that there are outside academic institutions, governments, nonprofits looking at this issue as well. So I think it'll be an issue which will have a lot of attention, which gives me a lot of comfort as well.
You said you'd pick up some new hobbies in the pandemic. What did you start?
Cooking pizza, just learning to cook, which I was never good at. I've gotten a little bit better.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, You can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You have presided over Google through massive social movements that reverberated in and outside the company. What have you learned as CEO since the walkout?
For me, it was a moment. I think it changed the company for the better. We've always been committed. It gave us an insight on what more we could do. We undertook deep commitments, and the biggest, overall in diversity and inclusion, I think if you're committed and you actually put in the effort behind it, you can make a difference. Now we have stated clear goals. We are on track to meet those goals. But it forced us to think about new answers. So for example, tech companies used to talk about the pipeline problem, but we are now going to places where the talent is. We are working much harder. So going to Atlanta, going to DC, going to Chicago, going to New York, that's improving our diversity and representation at all levels.
The war for talent is even more competitive now in this new world. What are you offering? Elon Musk has said big tech is a place where talent goes to die. How do you respond to that?
Look, I look at the fact that we are looking to hire 30,000 people next year. I look at the impact we have on many people coming and working in the latest cutting edge things. And many people come in, people leave Google. We are proud of people who have left Google. I think there are over 2,000 companies that have been started by whom we call as Zooglers. I'm equally proud of that, right? I think we are one part of a big system, and I think I'm proud of the role we play in bringing in people and the impact they have over time in the outside world.
All right, that's most of the heavy stuff out of the way. We're going to do some rapid fire just to get to know you a little bit better. You said you'd pick up some new hobbies in the pandemic. What did you start?
Pizza, cooking pizza, just learning to cook, which I was never good at. I've gotten a little bit better.
Cricket or soccer/football?
Wow, it's tough. Both. Please don't make me choose.
Okay. Squid Game or Ted Lasso?
I watched both, though Ted Lasso is much more calming, and so I'd rather take Ted Lasso over Squid Games any day.
I know you're a voracious reader, so what's the last good book that you read?
I've been on a podcast binge, so a lot more podcasts than books nowadays.
Okay. Favorite videos you watch on YouTube with your kids?
A lot of music videos. This whole notion where creators are watching other things and commenting on it, it's a trend which my kids are really into, and I've kind of gotten used to it now. So, watching other games, etc. It's a phenomenon.
Screen time policy that's worked for you as a parent, and what's not worked?
I've kind of given agency to my kids. The only thing I tell them is that I can look at their digital well-being once in a while with them, and so.
How do you do that?
I ask them to show it to me, and they show it on their phones. So, so that's pretty much the only thing. So beyond that, it's agency and talking to them about it and making sure we are spending time doing other things.
And making sure they develop good habits, that's basically.
Right, yeah.
Metaverse or real world?
Done correctly, you shouldn't feel the need to make a choice. You always want to be present in the real world, and when you feel the need to do something, you want to do that. But I do think presence and the realness of the real world will end up mattering for humans for a long time.
Do you own any crypto?
I wish I did. I've dabbled in it, but in and out.
In and out, okay. Larry and Sergey, I'm not going to make you choose. How many times a week do you talk to them?
I talk to them regularly. It kind of ebbs and flows. And so there are times we get excited about something and we spend a lot of time talking it through, but it depends on what I need.
A piece of advice you wish you had in your 20s and a piece of advice you wish you had in your 40s?
20s would be, being patient. I think when you're young, you're very impatient, which is a great thing. But sometimes you do amazing things by slowing down and being really focused and doing it over a period of time. And so I would advise the younger version of me to be more patient. Maybe at 40, I would say, when I look at climate, I want all of us to be impatient. So, I feel like when there's an urgency towards something, and I think the world needs to be impatient. So that's the advice I would give to an older version of me.
How much do you personally wrestle with the decisions that you have to make? And how much longer do you see yourself being the CEO of Alphabet? Not just Alphabet, but also Google.
Yeah. On the first one, there are moments we all have to make tough decisions, and some decisions weigh on me. But it's a privilege to do it. I have very good people helping me think things through. So I think the combination makes it all, fine. On the second thing, I'm so energized by the things we need to do. I didn't have much access to computing growing up. It changed my life a lot. Mm-hmm. The one laptop per child goal really motivated me to come into technology. And when I look at last week, us launching an affordable smartphone in India, the chance to bring the next billion users in Asia and in Africa online, that gives me a lot of energy.
All right. Well, we'll be watching from afar. Sundar Pichai, thank you so much for joining us. It's
Thanks,
wonderful
Emily.
to
Pleasure
have
to
you.
be here.
However you get your
This
news.
is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
So, how's life in Miami?
It's lovely here.
All right, you guys ready? Okay.
He runs the company that owns more Bitcoin than any other company in the world as of the end of 2021. Michael Saylor, one of the cryptocurrency's biggest evangelists, started his career riding the dot-com wave and saw that bubble pop firsthand. Could crypto be another bubble waiting to burst, or is it the future? Joining me on this edition of Bloomberg Studio 1.0, MicroStrategy founder and CEO, Michael Saylor.
MicroStrategy holding all this Bitcoin. Does it ever make you at all nervous?
No, actually, it gives me great comfort. I don't really think we could do anything better to position our company in an inflationary environment than to convert our balance sheet to Bitcoin, because we basically built a balance sheet on a non-sovereign store of value that's not a currency derivative. 2 years ago, we were sitting on a bunch of cash, and that cash was losing about 10% of its purchasing power a year. And then when COVID struck and the Fed took a more accommodative monetary policy, that cash started losing 25% of its purchasing power a year. So my anxiety was maximized around April, May of 2020 when we had the K-shaped recovery, and I realized that cash is trash, everything's about to get much more expensive, and we needed a strategy. So we adopted a Bitcoin strategy. It's driven up our stock by a factor of 5. In my opinion, it saved the company from a not very pleasant fate. So I'm totally pleased with where we are today.
Just Bitcoin? None of those other thousands of cryptocurrencies?
Look, Bitcoin is digital property. It's universally acknowledged as common property because it had a fair distribution, no ICO, no management team. Satoshi disappeared. It's pari passu to a commodity, to land, to gold. And it's pretty important that it be deemed property. The rest of the cryptos could be securities. There's just a lot of regulatory overhang and question about whether they're securities or not. And I think that the great innovation is the creation of common property in cyberspace. It took us 13 years to get to the point where that's universally acknowledged. So that makes Bitcoin the safe haven for a public investor or a public company. Everything else feels more like either venture capital or speculation.
Now, you personally are, and the internet can correct me if I'm wrong, the longest running software CEO in history. You founded it in 1989 when you were 24 years old. What has this 32-year ride been like?
You know, I learned a lot of humility. We came public in 1998, so, now I've been a public company CEO for many, many, many quarters. I lived to see 99% of my peers exit the business. So I didn't really understand this at the time, but now as I look back, what I realize is all my peers exited the business because they're forced to grow their top line and their cash flows at a frenetic rate, and eventually they get undone by dilutive acquisitions, and then they have to sell themselves. MicroStrategy, we've been very fortunate. We've been focused. We soldiered on. And we've always had a passion to make the best software we could. And as our competitors disappeared, we found opportunities.
You grew up as an Air Force brat, traveling around the world. What kind of kid were you? Tell us about your upbringing, a young teenage Michael.
I read a lot of science fiction. I read pretty much every science fiction book by all the great science fiction writers, probably 2 or 3 times. I played Dungeons and Dragons. Before we actually had these Wizards, Warcraft, and other games on computers, we actually had to draw out the dragons, and we had to write down what's in the dungeon, and we had to construct our entire virtual world. So I think before computers, we used our imaginations to create simulations and to exercise probability and distribution. And it taught me a lot about practical statistics. My background led me eventually to trip over a book by Robert Heinlein called Have Spacesuit Will Travel, where the protagonist gallivants across the universe, saves the human race from bug-eyed monsters, and for his services to humanity gets a full tuition scholarship to MIT. And it's stuck in my head that MIT was probably a good place to go if you believed in engineering and making the world a better place.
You studied aeronautics, I believe, and then you pivoted to tech and founded MicroStrategy with one of your MIT fraternity brothers. And the software basically provides business intelligence, helps companies make sense of their data so that, for example, McDonald's could learn how many Big Macs it might sell in a given night in Chicago. Is that right?
Yeah, the idea is to extract all of the data at an atomic level, like every item sold every hour of the day in every store in the world for every McDonald's. What we discovered is the world's full of companies that have billions of lines of data, and they're trying to make sense of them, and they had to extract those sophisticated sets of data, compare them to each other in order to make a decision about a marketing campaign or a product launch, or even something as simple as how many items should I have on each store shelf. And it's worth a lot of money to get it right, and if you get it wrong, you find out that you don't have the products you need when people want to buy those things, and it costs you a lot of money. So we were in the right place at the right time there.
You've witnessed some serious roller coasters. You saw the dot-com bubble blow up and burst before your eyes. What lessons have you taken away from that informs your strategy today?
I would boil it down to this stoic observation, right? You can acquire a thing, but, can you maintain the thing? And if you can maintain the thing, can you enjoy the thing? And what I discovered is a lot of people acquire things they can't maintain, and a lot of people can maintain things, but they can't ever enjoy. And so you want to boil it down to another metaphor. It's laser focus. You have to figure out what you are the best in the world at and what you can continue to be the best at the world at in the face of unrelenting, exponentially increasing competition. And once you figure out what that is, focus on it with all of your resolve. And if you do that, then you can stay in business. That's the first thing I learned. That's why I have laser eyes on Twitter. The whole point of laser eyes is you've got a solution, focus on the solution. Don't get distracted by all of your good ideas and allow it to dilute your focus on your great idea.
So about this possible winter, are you really not feeling the cold?
If you wouldn't hold it for 10 years, you shouldn't hold it for 10 minutes.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
The decision to bet on Bitcoin, to acquire the thing, would you say that's your Phoenix moment?
I would say it probably is. I never said it or thought about it like that, but I feel like most of my life was leading up to this point, and I understood the power of dominant digital networks like Google and Facebook and Amazon and Apple. because I rode that for a decade. I also understood the detriment of not being that dominant network. MicroStrategy competes against Microsoft. We compete against companies 100 times as big as us. When we got to 2020, what I saw was the winning strategy is digital transformation if you have the dominant network. The losing strategy is to continue to work harder and exponentially harder for a currency growing exponentially weaker. And I had a sense of the consequences if we did nothing, because I had seen the demise of 99% of my competitors, and I could see where we were headed if we stuck with the status quo. We would have to either adopt a Bitcoin strategy or sell the company, and we elected to pursue Bitcoin.
What was the reaction from investors, from other CEOs, CFOs, when you put Bitcoin on your balance sheet in such a big way, compared to the way they're reacting now?
You know, many people didn't really understand Bitcoin very well. They haven't taken the time to focus on it. Even today, I would say that 98% of the population hasn't spent 10 hours thinking hard about Bitcoin. So in the year 2020, I think most people were just ignoring it. It wasn't really registering with them, maybe 1%. I think that when we talked to our investors, what was interesting is privately, most investors were aware of Bitcoin and they thought it was a good idea. Publicly, their institutions that they're part of have a 3 to 5 year time lag from the point at which they can adopt new ideas.
So about this possible winter, are you really not feeling the cold?
Look, if you're going to invest in Bitcoin, a short time horizon is 4 years, a mid-time horizon is 10 years. The right time horizon is forever. You know, Warren Buffett said, you know, if you wouldn't hold it for 10 years, you shouldn't hold it for 10 minutes. So if you look at the course of 4 years, no one's ever lost money over 4 years holding Bitcoin. And if you look at, you know, our experience, we started buying it at $10,000, and now it's up by a factor of 4. So given the right time horizon, you're fine. So it's a blessing and a curse. The blessing is it makes it the most exciting, interesting thing in the financial universe everywhere in the world. And the curse is it can induce anxiety for people that have a short attention span or are focused on a narrow time horizon.
What do you think then is behind this early 2022 crash?
I think that there's a lot of dynamics here. If you look at the entire crypto ecosystem, you have a set of regulatory uncertainty, especially regulatory uncertainty around stable coins and crypto tokens and whether or not they're securities. And that creates a little bit of anxiety. You have a lot of leverage offshore. You have a lot of crypto exchanges that can trade with up to 20x leverage. And those crypto exchanges have many, many tokens that are cross-collateralized. And between them and the DeFi exchanges, you can get much higher than 20x leverage. So that's a second source of volatility. The crypto markets are almost designed to encourage volatility. And that creates kind of a love-hate relationship between the crypto ecosystem and the Bitcoin hodlers. The Bitcoin hodlers are holding for, you know, a decade, you know, and sometimes for 100 years and sometimes for 1,000 years. And yet you've got fast money hedge funds that have a tax incentive, a huge amount of leverage, and massive volatility. But you have two totally different investment mentalities here. And when they come together, the result is you've got, in my opinion, the world's least risky asset to hold over the next century called Bitcoin. And you've got the world's most volatile, fast money market, you know, called crypto. And they're both joined at the hip, for better or for worse, in the year 2022.
So clearly you're a hodler. But for the people who are terrified, who have never been on this roller coaster before, shorter term, what does the trajectory of Bitcoin look like to you this year?
I feel like it's consolidating at this level. This is a great entry point for institutional investors. I talk to high net worth individuals, family offices, public company executives, private company owners, and they watch Bitcoin run up in 2021, and there are a lot of people that would be afraid to own it if it was going up 400% a year. But if they're staring at it and it's 40% off the all-time high and it's consolidating, and they see that it's being embraced by people like Bill Miller, by very well-respected investors, it's being embraced by the regulators, it's being embraced by senators and congressmen and public investors and public companies, they're looking at this as like a good entry point. I'd be remiss, Emily, not to make a more important point, which is what's really going on here at a macro level is inflation. The CPI headline inflation is 7%. Look at the Turkish lira. It's collapsing. The peso is collapsing. So there's a volatility story for a conventional investor in Manhattan that's got a portfolio of equities. But 75% of the world can't buy the S&P index. They're in Africa, Asia, South America, and if they've got their assets in banks, they're going to have them seized. They can't buy the equity. So the real story here is digital property that solves a problem that 8 billion people face.
The big question is then, are you going to buy more? Yes or no?
Yeah, we're going to buy more. We're buying more with our cash flows. We've adopted a Bitcoin standard, Emily. That means that when we generate cash, we sweep it into Bitcoin. We've been generating, anywhere from $70 to $100 million of cash flow. So we will also buy Bitcoin with debt. We bought Bitcoin with $1.7 billion worth of convertible debt. We bought Bitcoin with a $500 million senior secured note that we pay 6 8% interest on. We also issued $1 billion worth of equity at the market, and we converted it all into Bitcoin. So combinations of cash flow, equity, debt, potentially through other partnerships.
You promised to host a yacht party when Bitcoin got to 100,000. When do you think that will be?
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
You promised to host a yacht party when Bitcoin got to 100,000. When do you think that will be?
The 100K party. When I did that interview, it was the fall of 2020, and I think Bitcoin was trading at 15,000. And John Vallis roped me in. He said, "Will you host the 100K party?" And I said, "Well, sure, I will." There was no doubt in their mind the party's coming quite soon. I was just amazed at the confidence of Bitcoiners. I don't have a price target for when it's going to happen. What I learned is laser focus. Stuff takes time. I'm comfortable with us working through this year over year. I don't need instant overnight success.
What kind of regulation are you anticipating? Which way do you think the Washington winds are blowing?
There's a profound shared appreciation that digital assets are the future of the financial industry, and the United States needs to lead. And I've been pretty impressed at the support in the Senate and Congress from the administration and from regulators all around the world for this entire crypto economy. And in the use case as digital property, I think that the regulatory treatment is pretty clear. If you sell it at a profit, you'll owe capital gains on it, just like if you sold any other property. I think that with regard to the cryptocurrencies, the stable coins like Tether and Circle, they're going to be regulated as currencies. Clearly, the administration wants to see FDIC-approved and insured banks issue them. So I think that, that we're going to see the banking sector enter into the stablecoin market. I think that many other cryptos are deemed as securities and will be deemed as securities, and they're going to be regulated as securities. I think that the marketplace is waiting to see what those expectations will be. And I think it's pretty clear that the writing is on the wall with regard to crypto exchanges, right? The SEC wants them to abide by the principles and the rules of national securities exchanges. And they've said that in the spot ETF denial letter that they wrote, and on several occasions. So I think the regulation is coming to the exchanges. I think regulation is coming to to the crypto security tokens. I think that with regard to stable coins, this is going to be a good thing. Right now, the stable coin market is maybe $170 billion all in. It's grown dramatically, but the truth is there's a demand for trillions of dollars of US dollar stable coins. And the reason that that entire market hasn't grown by an order of magnitude is because companies like Amazon and Microsoft and government agencies aren't going to move billions of dollars of stable coins around unless they feel comfortable that Treasury and the administration endorses them. And when we see FDIC-approved banks, when you see a JP Morgan issue a stable coin, you may see $1 trillion worth of that. And let me just characterize the entire movement. This is a rotation from an entrepreneurial-driven industry to an institutionally driven industry. And we're sitting at this point where we're crossing the chasm. And the question is, which entrepreneurs will be institutionalized and come public and get the appropriate regulatory licenses? Which existing institutions will choose to enter the market? Which banks, like the Silvergate banks of the world, will enter the market? And then there will be a shakeout. And obviously, 6,500 cryptocurrencies are not going to be around here in a decade. You're going to see many of these things go away as the industry shakes out and as it matures.
All right, well, you led me right to our lightning round. So want to do some rapid fire questions here, just looking for quick, short answers. Top 3 tips for people who want to get into crypto but don't know where to start.
You should educate yourself first, and you shouldn't really do anything until you have a firm conviction. Then do your diligence, be very thoughtful about which vendors that you work with and how you move forward. And then third, take a long time horizon.
Bitcoin is digital property, digital energy, or digital gold. You have to pick one.
Bitcoin is digital energy, and it is the future of the internet.
Web 2.0 or 3.0? What do you think?
I think, they're all marketing phrases. If you actually put a layer of digital energy, or in this case, wrap Satoshis around your persona as you navigate through cyberspace, you can completely eliminate all the things that plague us in the internet. The next version of the internet is a layer of digital energy wrapped around digital information.
Quick one, favorite chess move? What is it?
I guess the Queen's Gambit as an opening.
Okay. I hear you like routines. What is your daily routine?
I scan the news. I tweet, hopefully something inspirational and constructive and cheerful to the entire Bitcoin community. I hit the gym, get in some daily exercise, and then I take a round of meetings, either business meetings or podcast or something. Work through a bunch of business issues.
When do you look at the price? Is that the first or second thing?
Sometimes, some days I don't look at the price. Some days I do. Mostly I just look to see the mood, so I can read the room and figure out what's appropriate and constructive to say in order to drive the narrative forward.
You mentioned Twitter. Your Twitter evolution is kind of epic, and I've got a recent tweet. We've just got a minute left. I want to read back to you. Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy. What's the goal here with these tweets? Where are you going with that?
I tweeted that once I fully grasp what's going on with Bitcoin. Bitcoin is a decentralized network, which means that there are 100 million plus people out there that are supporters of Bitcoin. There are millions and millions of nodes. It is a swarm creature, right? It's a chain reaction in cyberspace. And once you understand that Bitcoin is a chain reaction in cyberspace, it changes your view of the asset and your view of the world and your view of the future.
So what does keep you up at night, Michael? I mean, you have to think about the risks. What do you worry about? It can't be Bitcoin, sunshine, and rainbows in Miami every day.
The truth is, I'm much more comfortable today than at any point in my business career because I feel like we have found the right strategy at MicroStrategy, right? The Bitcoin standard strategy. And, you know, I'm happier going to bed every night than I ever have been because I have a mission, and my mission is to educate the world on Bitcoin. And I think I can do a lot of good doing that. And the world has a need. So nothing really keeps me up at night. I'm more motivated than ever.
I think that's a great place to end it. Michael Saylor, founder and CEO of MicroStrategy, thank you for joining us. I'm so glad we had some extended time today. Appreciate you taking the time.
Yeah, thank you, Emily.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge
came back of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Managed to capture the fashion and business worlds like the British handbag designer Anya Hindmarch. She's won fans around the world with her range of luxury bags, turning her label into a fashion powerhouse.
It's really fun starting a business. It's fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15.
But Hindmarch has also become known for her stance on sustainability, working to eliminate single-use plastics before it became a global focus, and seeking sustainability in her designs.
I'm quite scared. I'm very scared by this climate situation. We only look at this last summer and look at the flash floods and the fires and the heat waves. Imagine if that was a monthly situation. And I think that, we all have to change our behavior.
In this episode of Leaders with Lacroix, we talk to Anya Hindmarch about building her brand, making luxury more green, and the challenges of leading a company through the pandemic. Anya Hindmarch, thank you so much for speaking to me on Leaders with Lacroix.
It's lovely to be here. Thank you very much for having me.
Anya, you're one of the most fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, so the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key. So,
will that be inflationary? Will that be, sounding too businessy? But if you bring back, then this is supply chains moving.
Yeah,
right?
it's huge. I think that it's it's going to be quite significant. We watched it happen, and it's going to possibly reverse. Who knows? Maybe there'll be some amazing technological discovery that allows us to move things around that doesn't harm the environment. But I think naturally we will look to closer supply chains. There will be a cost to that, probably, and so there is going to be this aspect we were saying earlier of buy less, buy better. And that's going to be very interesting, actually. And those countries that have preserved craft and manufacturing are going to suddenly be in the driving seat.
So, Anya, talk to me from that day where you said, right, I want to be an entrepreneur, or I want to go to Florence and learn more about leather goods. You've had, immense growth, also challenges along the way. What was the most challenging?
Well, I think, growing a business is like a game of chess, isn't it? It's the most fun. I love every second of it. Navigating investment and sometimes, actually, I think one of the things that was challenging for me is actually I was always CEO and creative, and I split my role and I moved to creative and brought in a CEO, and I had, some brilliant people. But actually, I think losing the founder in that role often can be quite challenging for a business. And I think one of the things I've learned often, it's not always, because it absolutely can work, but I think often actually growing underneath that sort of natural succession planning. So there's quite a lot to learn on growing a business and not tripping over. But I think ultimately, if you're passionate about product and you're really hardworking, because it's really hard and it's a life commitment. This is not a job.
Are you not working?
No, I'm always working, but I love it.
But you love it. What is there anything that you hate about your job?
No, not really, actually. I mean, listen, all the normal things. But no, I love what I do. Every day feels like a lucky dip. You're never quite sure what's going to come into the inbox.
What's your best piece of advice that you've ever gotten? I think your father was a mentor.
Yes, still is.
Himself was like an entrepreneur.
Absolutely, yeah. And one of his best bit of advices, which would be the one that I would pass on, would be, actually, if you just keep going, if you just don't give up, then you succeed. It's not often about succeeding. It's about just not succeeding, not failing in a way. So I think that's a good bit of advice. Also, things come of things. If you do things, things happen. And so yes, lots of things that have helped me. Sort of, it's so often you're hitting a brick wall and you've got to find a way round it, through it, or over it. Ultimately.
But who do you confide into? So is it always, as chief executive and founder, is it always at the end of the day what your gut tells you?
I think gut's really important, actually, and I've learnt actually a couple of times the hard way by not listening to my gut, actually. Sometimes you sort of feel you should be, listening to some other advice, but actually I think gut is a very good, a very important one.
For expansion?
For everything, actually. I think hiring, it's all about people, ultimately. Ultimately business is successful, I think, through people and your team and the loyalty to your team and their loyalty to you, and that tightness, that the health of your sort of senior management team, I think, is sort of, as in the health of the relationships, is probably the single most important thing. And interestingly, I think it's often the thing that has no value on a balance sheet. And actually, if you were to, I think, do all the sort of due diligence on a company, almost the most important thing would be to actually take the senior leadership team out to dinner and assess how happy they are to joke and jibe and have a laugh. I think that's incredibly important, and I feel very lucky in that I have a great team I work with.
You've also been always very generous with your time. You were UK Trade Ambassador. You do a lot of stuff for diversity and promotion, inclusion, the British Fashion Council. Is this an idea of you have to give back, or do you just enjoy imparting wisdom?
I think it's that it's really nice to give back. I've been so lucky to receive so much great advice from so many, and it's also that I find it fascinating. I've learned so much through those roles or those institutions, and really just seeing how really great people behave. Even down to how they receive a cup of tea from someone, in a big board meeting, and the manners and all the sort of real sort of learnings that you get from seeing a really great chairman chairing a meeting in a really beautiful way. So it's very much a two-way street, but it is lovely to various organisations I've been involved with, certainly in the UK, and it's lovely to also get involved and give back where I can.
You're very creative. I remember the hearts that were sparked all around London. There's the Anya Village with the greengrocers, I think the cafe, and also the hairdresser. Where'd you get this inspiration?
Well, I think creativity is important to me. It's part of what my brand is. And I think that it's interesting, the Village was the idea of actually, rather than having stores all over the world, actually going local, it's that local thing again, and bringing the creativity to an experience. I think retail absolutely has a place in this digital world, but there needs to be a reason to visit. And the Village is a group of stores in Knightsbridge, in Chelsea, based around my very, very first store. So it's like going back to my roots. We have a little cafe there. We have 6 little stores. And actually, I think it's so lovely to meet. I'm there the whole time, unlike the stores I had all around the world when I wasn't able to visit, didn't know the team so well. So it feels more authentic. And it's a lovely place to kind of meet my customers and to use as a platform to talk about the things that I care about.
It kind of goes back to this idea of local, of more sustainable, of not necessarily downsizing, but being more, I guess, more down to earth.
Well, it's funny, down to earth is important to me, but I think it's in my whole career has been to the backdrop of that word globalization, global. And I watched it and I did it. And now I have this magnet, actually, to have localization. It really feels like we're changing. And so therefore I'm sort of bringing it back. And it just felt completely right to strip it right back and to go back to where I started and to really engage and to communicate. And it's become this lovely little area where we have all these fun ideas and people really get engaged.
Up next, Anya Hindmarch started focusing on sustainability long before it became fashionable. Her views on how retail needs to change and what motivates her to be green.
I think it's very hard to imagine anything being very luxurious in fashion if it's doing harm. So for me, it's I suppose it's my happy place. It's what I'm interested in and feel I should do.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
March has turned her fashion accessories brand into a global name after starting the company as a teenager. But she's also become known for her stance on sustainability, working with supermarkets to eliminate single-use plastics and pushing to create greener products. We discuss how it all started. Talk to me a little bit about sustainability. It permeates through most of your designs. And 15 years ago, you started with a canvas bag that was called I'm Not a Plastic Bag.
Yes, it has. It's snaked its way through my life, actually. It's a sort of very welcome stranger in many ways. Well, it started back in 2007 when we were approached, actually, to talk about a book that was trying to encourage people not to use single-use plastic. And it was a bit of an aha moment for me in the sense that I think I was struggling with how to make a difference and how to affect change in my own life and in my business whilst hearing this word environment, and just didn't know what to do about it. And I felt I could use the platform of fashion to communicate a sort of change in behavior. And fashion's brilliant like that. Fashion has an amazing sort of purpose in the sense that it really can change the way people behave and dress and look. So that was the project called I Am Not a Plastic Bag. Which went mad. It was a simple...
Sold out in what, 2 hours?
80,000 people queued in one day, to give you a sense, and it rolled on around the world. I mean, 30 people went to hospital in Taiwan. Of course, I'm not at all proud of that, and we halted at that point. But the point is, we had the aim of awareness, and awareness we got, but it made a difference to the project. So prior to the project, I think the UK British Retail Consortium said something like 10.6 billion bags were used in a year, and I think it was reduced to about 6. So it really did make a difference, which was exciting. And then legislation came in and so on. So yes, that was Project A. I think every line on my face is to do with that project. But Project B was really back in 2020, that lovely year we've all just shared.
A very easy year. Nothing happened in 2020 apart from a pandemic.
Walk in the park, yeah. And I felt I wanted to revisit the subject because actually the problem was still there. I mean, I think there's 8 billion tons of plastic on the planet at any one point. So we brought out a bag called I Am a Plastic Bag, which was 2 years in the making, which was incorporating recycled PET plastic bottles, but actually the aim was to make a very luxurious, beautiful product out of plastic that would have been destined for landfill. The only problem is it was so luxurious and beautiful, it actually behaved like the beautiful cotton drill that we set out to replicate. And so we managed to find a way to coat it in the plastic, the film that's between the windscreens on cars. So, I mean, R&D-wise, it was quite complicated, but it was a good project.
And is this to raise awareness so that you also get people talking about, as you say, fashion has an immense power of changing behavior and what people want?
Yes, absolutely, it's about awareness. It's also, in the case of the bag, it's saving plastic from landfills. I mean, it's just a very direct response. But I hope it also prompts, just people to stop and think and discuss. In fact, when we launched that project, we actually closed all of our stores for Fashion Week, and we filled them with 90,000 used plastic bottles, which is probably why I got COVID, actually, thinking about it now. But the idea was...
that you collected...
We literally the whole company collected bottles, and we filled the store to the brim with bottles to show, to kind of connect people to what 8 minutes of landfill looks like. Because actually, when you see it, it's quite shocking.
And the response to that must have been amazing.
It was really viral. And we did the same in Tokyo, we did the same in Hong Kong. It sort of rolled around the world. And I hope it's really contributed to people thinking about actually how they consume recycled materials and how they can consume differently. So it's sort of, yes, as you say, it snaked through my life.
And you're also working now on leather that then can, if you put it in a landfill, can basically be not recycled, but doesn't, go to waste.
Well, yeah, so after those two projects, in fact, we just worked on another project, which I'll come back to, which is to do with supermarkets, again, with recycled plastic. But all the projects we've worked on are about saving plastic from landfill and actually prompting, considering using recycled materials and a different way of thinking. But actually, I suddenly thought, well, someone said to me, actually, that there's no waste in nature. And it's such an obvious statement, but actually, why on earth are us stupid humans using landfill when nature's got it all sorted out? So I wanted to try and replicate nature in designing a fashion product. So we brought out a project called Return to Nature, which is a really beautiful, beautiful leather bag. And we can come to why leather in a second, but beautiful leather bag, which is made in a way and treated in a way, tanned in a way, finished in a way, that means that were it to ever end up in landfill, it would naturally biodegrade and compost, and in fact supports 20% stronger plant growth. So actually, it can't do harm. And that felt like a rather academic project in many ways, but I think it's important to look at end of life in fashion, this huge polluter that fashion is, and to see that there could be another way.
Who do you do this for? Is it the kids, the planet? Where do you get the inspiration or the drive to actually do more sustainably?
I'm quite scared. I'm quite scared by this climate situation. Well, I'm very scared by this climate situation. And I think that, we only look at this last summer and look at the flash floods and the fires and the heat waves. And imagine if that was a monthly situation. And I think that, we all have to change our behavior, I think, and what we do. And so I think, I love fashion with purpose. That's actually interesting for me. I think it's very hard to imagine anything being very luxurious in fashion if it's doing harm. So for me, it's I suppose it's my happy place. It's what I'm interested in and feel I should do.
And do you see a big shift actually in fashion overall? Because at the same time, you make profit by selling. And so how do you match the two? You have to sell more, but also you want to be more sustainable.
It's a really hard sort of circle to square that, and I think it's a really important question because actually we need to maintain a healthy economy. We know that probably the thing that will answer the climate issues the most effectively will be big governments paying off less wealthy governments to stop deforestation or whatever it might be. So we need to make sure that we're buying things and contributing to tax so that we can do these good things. And so and of course we need to employ people, and fashion is a fantastic employer. So how do you square that circle? And I think the fact is that we all need to carry on buying and purchasing, but buy better. Buy less, buy better. It's the classic thing. So, if you're going to buy 5 T-shirts a year, buy 2, but buy really good T-shirts. The same for bags and for any aspect of any clothing.
And do you think there's a shift overall for fashion to be more sustainable? And is that driven by, stakeholders, by chief executives and entrepreneurs, or is it actually the end consumer that just wants to buy better?
I think what's lovely is it's coming from both ends, but it's actually coming particularly from the younger generation, and quite right too. I mean, it will touch them without a doubt, the climate situation. So I love the fact that it's my kids who are the most passionate. But I feel very, very responsible. I mean, it's a bit like smoking. We didn't know it harmed us when we were smoking. It's the same with the climate. So I feel very responsible, and I just think that, we're far from perfect, but we're just trying to chip off every bit we can and communicate loudly about it. It's really fun. It's exciting. And you don't have to not be successful. In fact, I would argue, I think you could be more successful by having a responsible business.
How do you think the younger generation will be different to us? Will they shop less? Will they shop, differently? Do they go out to the street and pick it?
Well, all of the above, I think. But I think the bit that's the most effective is they shop differently. And I know that my kids all buy secondhand clothing, they rent, they are very aware of the brands they buy from, and it's really cool. I'm sounding patronising, super proud of my kids and of that generation for how they behave. They're really leading the way.
Coming up, leading a company through the pandemic. The lessons Anya Hindmarch learned through a challenging period for businesses and society.
Fashion is a bit old-fashioned, honestly. The timetables are out of sync. We're delivering winter and summer and winter, and we decided it was the moment to make those changes permanently. So we decided also to use it.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
British handbag designer and entrepreneur Anya Heinmarch has a unique insight into leadership, building her company into a global fashion force. We discuss emotion in the boardroom and navigating her team through a challenging time for both business and society.
How difficult was it for you? What did you learn about yourself and the company in the pandemic?
Well, I felt actually so lucky in many ways, and I feel guilty saying that because it's been so horrible, still is so horrible for so many people. So to talk about silver linings feels really inappropriate, so forgive me. But I felt it made me realize how lucky I was in the people I work with and in my family, because actually, you know, we sort of doubled down and just rolled up our sleeves and got on with it. And of course, there were times it was not easy, but I just most of all wanted to make sure everyone felt safe and you know, we have a lot of people whose parents are overseas. But also we looked at it from overused word, reset moment. But you know, fashion is a bit old-fashioned, honestly. The timetables are out of sync. We're delivering winter and summer and winter, and we decided it was the moment to make those changes permanently. So we decided also to use it to actually, you know, really reset our calendar, the way we work. We did some really nice projects for the NHS, which was really satisfying for everyone. And I think, you know, to a certain extent, we had a good war, if you like, and I feel terrible for saying that, but I think it was we learned a lot about ourselves, probably. So
do you think it's a real reset, or is it a reset, a momentary reset for fashion?
I think it has to be a real reset. I really do, and it was quite, in some ways, worrying to me seeing how so many things just went straight back, and not to point fingers because that's not appropriate and nor fair, but I do think that you know, the climate situation is so serious, we can't just go back to the way we were behaving. There need to be some serious changes, and so I'm very determined that we sort of stick to our guns on those changes.
Who will drive that change?
Well, for us, the company is completely committed. That's our agenda, and that's to do with timetables. It's to do with the way that we have sales, for example. I mean, you know, Black Friday feels for us to be completely wasteful. In fact, we don't obviously participate in that. To just think about how we source things. So we will be driving that, and obviously, I think everyone is thinking and finding their way through. But it's hard. It's really hard. Yeah. It's hard for a lot of people right now.
Anya, you also wrote a brilliant book that, you know, is very inspiring for many women, because you talk about being emotional in the boardroom and actually how that's okay, and actually it should also be a strength.
Well, thank you. It's a very honest book. It's the least cool book, I would say, but I wanted to write as if writing to my daughter or to you know, my younger self about what it's like, and that, you know, life isn't always easy, and actually that it's important to be honest about doubt. So it's a book about doubt and about sort of managing the many roles that women, I think, juggle, and indeed men juggle. I wanted to share honestly about how it feels, because I think people are always going to go, oh, you're so lucky, you've done well, and actually no, it's a tough journey, and I think it's important to be honest. And to your point about the emotion in the boardroom, so often I think as a woman in a boardroom, you feel it's wrong to be feminine or to be you, and actually I was once someone said to me, you know, Anya, slightly aggressive with the name, Anya, you must take the emotion out of this. And I felt a bit stung, and afterwards I realized, actually, no, I mustn't. Actually, emotion is what drives my business. It's what actually I stand for. It's what I think I'm good at. And I think women are very good at emotion, and it's a very important thing in the workplace. So actually, I think we need to stand up for ourselves a little bit more. And so it was just a very honest book that I hope, if it helps one other person, then it's done its job.
Do you think it's changing?
I really do, yes, because I think I talk about my generation, our generation, I'm a bit older than you, but as the transition generation, which is that, you know, we are working as hard as our fathers did, and yet I have the memory of how my mother was when I was growing up, which she was very much the homemaker, and she did everything so beautifully, but you can't do both roles and survive yourself. So it's been quite tough, I think, for this transition generation, but it has transitioned to a certain extent, and I think therefore I can see in my children that they understand that it shouldn't always be a woman's job to do all the home life admin, for example, and I can see that changing already.
Everything you do is also, it's not only creative, it's a bit quirky. It always brings a smile to everyone's face. Is this what you are? Is it your leadership motto?
Well, I don't really have a leadership motto. I've never really believed in mottos, but I do think that fashion should make you smile. Fashion is, it shouldn't be taken too seriously. It's about making you feel better. No one needs more clothes or more handbags, so it is about actually making you feel happier and more confident. And listen, if we can add a smile, and the chubby hearts that we did, one was floating out here, was just a moment in London when everyone was a bit sad, and it was just a nice surprise. So why not, really? And I think creativity often is a lovely way to communicate and to pull people on a journey that you're passionate about. So we do.
I mean, when you look at all these amazing, projects, and it also is with the roses, the lit up roses that are for remembering people that we lost, that we loved. Do you have special projects, or is it like asking you to choose between your children?
Probably that. I think the illuminated rose garden, which is called the Ever After Garden, which is in Grosvenor Square here in London for December, and there's 25,000 illuminated roses, and we wanted to do something to benefit the Royal Marsden Cancer Charity, which is the most amazing research cancer hospital, and it's a very simple idea. It was a fundraising idea, and actually to donate a rose and contribute it's a why not, and it's quite a special experience. So, but I think probably the chubby hearts would be one of my all-time favourites. But then the chubby cloud. I know there's so many.
There's so many. What's in store for Anya in the next 5 years? That little question.
That small question. Thanks for that. Well, listen, we've got so many projects, some really exciting projects coming, and we want to lean into those projects that we've started. I care passionately about using our fashion platform to, for a better purpose in a way, and we want to grow our business in a healthy, good way that's respectful. So there's a million different projects, and I'd have to kill you if I told you, obviously. So I'm sorry about that.
Thank you so much.
Thank you.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Pascal Soriot has played a vital role in tackling the biggest health crisis of our time. As the chief executive of AstraZeneca, he's overseeing the production of one of the leading vaccines against COVID-19.
The COVID pandemic tested us, but at the end of the day, I think it was really a positive for our organization. First of all, because everybody is very proud of the difference we've made globally. Again, more than 2 billion doses of vaccine, 30% of global supply, or close to 30%.
Soriot has led AstraZeneca for almost a decade, fending off a takeover bid from Pfizer along the way.
I'm suddenly used to having to compete and fight for what you believe on. That drives my focus on performance. I'm used to setbacks, I'm used to challenges, and that's a spirit I always try to instill in the organization.
In this episode of Leaders with Lacroix, we talk to Pascal Soriot about what drives him in his work, where we are in fighting the pandemic, and the challenges they faced in developing their vaccine.
There's nothing really that we would do differently. Politics was always going to be part of this issue. It probably was more than we had anticipated, but it was always going to be part of this issue because we expected issues of moving vaccines around the world. We expected export bans. We expected debate around the value of vaccines. So we expected a lot of political issues and debates.
Pascal Soriot, thank you so much for joining us on Leaders with Lacroix. Do you remember where you were and who you spoke to the minute where you realized how big and how dangerous a pandemic was going to be and what role AstraZeneca could play in it?
Yeah, absolutely. January 2020. We have a large presence in China. We have about 20,000 employees in China. We are the largest pharmaceutical company there. So as you can imagine, I'm very close to our Chinese team. And very early on in January, I realized that this was going to be a big issue because, I was talking to our team in China every week, twice a week, actually, to see how they were doing. And I realized this was going to spread and become a global problem.
So what did you learn at the time about yourself, and what did you learn about AstraZeneca?
Well, I learned a lot about, the company as a whole and the kind of people who work for this company. Because we immediately thought, how do we help? What can we do to help? And, everybody across the company was ready to do something. So we started very modestly buying masks and distributing them to hospital in needs. If you remember at the time, PPE was a big deal and the lack of masks was a big problem. We looked at our pipeline of products. How could we repurpose some of our medicines to help? We started developing a long-acting antibody combination. And then at some point, we came across the Oxford vaccine and decided to develop it. So we really learned about living our values. The whole company very quickly stepped up. We learned the value of collaboration with the private and the public sector. And we learned the value of being entrepreneurial, nimble, and also resilient, because this has been quite a journey, and the resilience of the organization was tested at times.
Pascal, what was that first phone call with Oxford like? And what was it like when actually the vaccine got approved after the trial? Was it jubilation? Was it, cautious expectations?
Well, the first phone call was really a great phone call because, we were thinking, how do we help? And we thought, we have potential treatments. We have a long-acting antibody combination in development. A vaccine would be the next step. And this looks like a great technology. And, many people at AZ have connections with Oxford University. And we know a number of people there. So the first contact by telephone was, of course, an easy one because we knew each other. And in terms of the results, it was, of course, very energizing. We were so happy to have a vaccine that works and can make a difference globally. But we never really had much time to think and celebrate. We did celebrate a little bit, but essentially we were go, 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 because time was of the essence to get approval, to manufacture. And as you know, we had a few challenges in some geographies. In some geographies in the world, it went very well, and in other countries, it was more challenging to supply. So we didn't have much time to think and celebrate. We were focused on delivering and making sure people could get access to our vaccine.
Yeah, and I imagine between the go, and of course being in the middle of a political firestorm in certain cases as well, was quite challenging. What was the most infuriating or frustrating part of the process?
Well, nothing was infuriating. You know, in our industry, we're used to challenges. I mean, you tackle a big problem like cancer, and you try to develop new treatments, and sometimes you succeed, sometimes you fail. And sometimes some of those failures are, of course, large ones and very disappointing. So we are used to dealing with challenges and success and setbacks and sometimes criticisms. And, you know, it's part of life, really. So we had to take it on the chin and deal with it and try our best. And our focus was really on, again, delivering the vaccine to the world. And, you know, I think people sometimes forget that Europe, of course, is a very important continent. Look, I'm a European, I love Europe. But Europe, not everybody in the world lives in Europe. I mean, there's another more than 7 billion people living outside the US and Europe. And in many, many parts of the world, in most parts of the world, everything went well. So when we were looking at it on a global basis, we realized we had to help Europe more than to deliver more vaccine. But we also knew that elsewhere in the world, everything was going very well.
Pascal, was there anything that you would do differently with hindsight, the benefit of hindsight, in Europe? And do you feel like you were unfairly politicized at moments?
You know, I mean, I think sometimes people try to read too much with hindsight. I mean, it's like running a clinical trial. If the trial fails, people will ask you, would you do this trial again? I mean, if you know it fails, of course you will not run it again. But this is hindsight. I mean, so there's nothing really that we would do differently. Again, you know, politics was always going to be part of this issue. It probably was more than we had anticipated, but it was always going to be part of this issue because we expected issues of moving vaccines around the world. We expected export bans. We expected, you know, debate around the value of vaccines. So we expected a lot of political issues and debates. It was more than, in Europe, it was more than expected, of course. But we, you know, stayed totally focused on delivering the vaccine and solving the problems as they came.
Up next, Pascal Soriot discusses the battle against vaccine disinformation and how the pandemic could transform the world for years to come.
It's likely that this pandemic will be endemic over time. I mean, it is already more or less endemic in some geographies in the world, which means it will be like the flu. It will come back on a regular basis, and people may have to be vaccinated. Now, the question is, do you need to be vaccinated every year, every 2 years? We don't know that, and it will depend on the durability of these vaccines.